budget presentation speech right here on Motilal Oswal's YouTube channel. I'm Avan Dabash, consultant anchor. Now, today is the day, and I want to say first up, a huge thank you to all of you who are logging in. Do remember to share this link right now with all of those who would be interested in watching the union budget, because we are going to decode the impact on taxpayers. We are going to decode the impact on the economy in light of the kind of global uncertainty that we are facing. So welcome once again to all of you, and thank you so much for joining in. Now, today's union budget, yes, it is being presented by the Finance Minister, Nirmala Sitharaman, for the financial year 2026-27 in the Lok Sabha. And yes, indeed, this is at 11 a.m. on a Sunday. The first time ever that the budget is being presented on a Sunday. And this, incidentally, is the record 9th consecutive union budget on the 1st of February, the longest streak ever by any finance minister in independent India's history. Not the first time that it is being tabled on a weekend, but yes, indeed, the first time that it is being tabled on a Sunday. So good to see a lot of you tuning in. Thank you so very much. And once again, please do share this link so we have more viewers on the YouTube channel. And I promise you it will be worth your while. So today we have the union budget being presented, and this is at a time when we have seen investors really prioritizing stability over bold headline-making reforms. The expectations are very subdued going into this year's budget. Now, let me tell you why you should be tuned in today to the Motilal Oswal YouTube channel. We've got a whole host of experts who will be joining us today, not just to decode the budget before, but to also give us a sense as to what to expect. Madhusudan Kela, the founder at MK Ventures, is going to be our first guest on the show within the next couple of minutes. We have Ajay Menon, who will be joining in, Managing Director and CEO at Motilal Oswal Financial Services. At 11 a.m. live, stay tuned, because we will be cutting into the Parliament with the Finance Minister as she breaks the budget speech. And then post the budget, we have some post-budget analysis from all angles. Mr. Ramdeo Agrawal himself, the chairman of Motilal Oswal Financial Services, joins in. We have Aashish Somaiyaa of White Oak Capital, and we will be decoding the budget from the tax angle with some of the sharpest minds in this world. We've got Mr. Ketan Dalal, the managing director at Catalyst Advisors, Parizad Sirwalla of KPMG, as well as Sudhir Kaushik of taxspanner.com. They'll all be joining in to decode what the income tax slabs, whether or not there are revisions on that front or on the corporate front, what they mean for you and me. So we have a stellar lineup of guests who will be joining in from the metal side as well. Mr. Prithviraj Kothari, Managing Director at Riddhi Siddhi Bullion, and Navneet Damani, who's the head of Commodities, and will be joining in from Motilal Oswal. Now, let's just take a look at the overall backdrop, because Budget 2026 is coming at a time when there's severe global uncertainty. The past year has been very strained, in particular with India's largest trading partner, and that is the United States, as they have slapped on the 50% tariff, very hefty, on the Indian exporters. Not just that, we've seen this huge free fall that has played out in the Indian currency against the greenback. We've also, at this point of time, seen the new US Fed chief, and his stance has been fairly hawkish as of now, so lots of conversation happening on that front. There has also, apart from that, been the kind of bull run that we've seen, a very hectic bull run that we've seen in commodity prices. Gold and silver prices have gone through the roof. They've taken everyone by surprise. So are we going to see some tinkering, some duty imposition on gold and silver? Of course, that is going to be there with a lot of risks and a lot of downside as well to manage. But is that going to be there or not? I think those are some of the hot topics on the market's mind. But other than that, let me tell you what you should be going in with in terms of expectations. I think the government this time around is expected to prioritize robust economic growth, but at the same time, they need to make sure that they shield the economy from the global uncertainties via policy reforms that will come in through various schemes across various sectors. So the expectations are so wide-ranging this time around, from lower corporate taxes for manufacturers to capital gains tax relief for foreign investors as well. Now, I'm sure a lot of our viewers who are tuned in right now will be having lots of question marks regarding the income tax slabs. But this time around, analysts and most of the experts on the street are going in with the expectation that the government is going to concentrate more on administrative tasks, and they don't expect too much tinkering in the income tax slabs. And let me also tell you why. This is because we have the new Income Tax Act as well, which is going to take effect from the 1st of April 2026. So the key expectations are that the centre will be looking at a modest tax relief. This includes an increase in the standard deduction to 1 lakh rupees, the LTCG exemption limit to about 2 lakhs, and perhaps a provision of 80D under the new tax regime. Now, in terms of individual sectors, of course, a lot of them are going to be in the spotlight, but I think the big talking point is the defense-related sector. So defense-related capital spending, that is projected to be raised to about 2.3 lakh crore. That's what the expectation is from the 1.8 lakh crores last year. So that's going to be a very big talking point, and I think something that is really being baked in this time around. Like I said, whether or not we see any duty imposition on gold and silver is going to be very watched out for. And will disinvestment be revived? Remember, it has been dead for the past so many years. Is there going to be some revival in disinvestment? That remains to be seen. Now, let's just also put into perspective what the markets have really been working with over the last 1 year. Because one thing that we cannot ignore is the continued FPI selling that we have seen. Just to put numbers into perspective, FPIs have been net sellers in Indian equities to the tune of 1.6 lakh crore rupees in the year 2025. That's about $18.9 billion. In the month of January alone this year, that's the last 1 month that's gone by, the FPIs have sold a sizable amount in equities to the tune of about 22,000 crore rupees by mid-Jan alone. So there has been hectic FPI selling. So we need to see whether or not there are going to be any market-moving announcements from the standpoint of the FPIs and what's really going to bring them back, because this is very disconcerting from a market standpoint. Now, let's look at the mood of the market, if you will, or the returns of the market on what we've seen average for the past 10 budgets or so. And actually, on budget day, it's been very subdued. So I'm taking the average returns of the budget, and on the Nifty 50, it's been very meager, just a plus 1.7%. Very meager, though there have been returns that have ranged to a plus 4.9% approximately in the year 2021, for example. So yes, it has been very volatile, but if we're just accumulating the average, the market returns have been awfully subdued. Ditto for the Bank Nifty. On average, it's just been about 0.5% or so. And I think that the historical data from the Motilal Oswal research team goes to show that markets do tend to de-risk ahead of the union budget or ahead of the big event, and that really reflects a lot of uncertainties around the fiscal priorities, taxation, as well as policy direction. I'm just going to tell you what the markets are up to today, because it's a very subdued move going into the budget. We're up by about 0.2% on the Sensex. For the Nifty as well, very quiet around the 25,350 mark. For the Nifty Bank as well, it's a fairly quiet move. We're up just about 70 points. IT is going in very nervous into the budget. And when it comes to the broader markets as well, you're not seeing too much action. Yes, you did see a lot of those metal stocks reacting, and largely due to the way we've seen volatility in some of those metal prices, particularly in gold and silver, precious metals. And then there have been some select pockets of gains. But just going by historically what the government has already done, they have in the past year already implemented measures such as resetting the GST rates in order to enhance efficiency. They have provided those income tax cuts to boost disposable income as well as to boost consumption. So what more can they do on that front? That just remains to be seen. We do have Mr. Madhu Kela of MK Ventures, the founder, who will be joining in just a short while from now. So we will be watching out for what exactly he has to say regarding the budget, because there's a lot as well going on in terms of individual sectors. A lot's going on the market's mind, especially in light of the kind of FPI selling that we've seen. And let's connect right with him. Madhu, thank you so very much for joining in. It's a pleasure to have you on board. I just want to start off by getting a sense from you, Madhu, because I think this time around, like I said, we're not going in with expectations that there's going to be big policy-making reforms. It's going to be policy stability that will be prioritized. Do you concur?
Yeah, I would say that, first of all, good morning and thank you for having me. It's always pleasure interacting with you. I would say budget over the years, if we see, has become, kind of a less and less important from a market perspective, because in this government in last 11 years, we have seen policy happening absolutely throughout the year. And rather than waiting for a big bang or one day event kind of a thing. So just to know, if these GST cuts were announced in this budget, it would have been kind of a big bang budget, right? But they did not wait and they did announce
Yeah.
it maybe 6 months back only. So from that perspective, is the budget every day is what I would say in the current government. Having said that, in India there is a tradition. All of us really prepare, and something or the other really big happens from a policy direction perspective. So, in my understanding, I am not in the camp wherein there is going to be a major tax relief on corporate taxation or capital gains and all. At least I am personally not expecting. What I am expecting is continuity of what is already been done. Last 2 years has seen a lot of emphasis on the consumption side. Maybe this year the government focus shifts to capex, which is the right thing from the market perspective. And what we are seeing in the current year itself, the defense is spending up by 56% YTD. That's an indication of how of the shape of the things to come. Fiscal consolidation, again, very important part of the budget, should continue because, again, we have seen many years of Modi ji and we have seen 11 years of Nirmala ji. They have, regardless of what the situation was, even in the COVID time, they actually did not take their eye off from fiscal consolidation. So that should continue, even though on the prima facie, the numbers look mismatched for 2025-26 because of the lower tax rate as well as the lower collection on account of GST. But I would imagine there are similar savings which has happened on account of lower expenditure which happened and maybe increased dividend from RBI. So all of this ultimately should still match out and we should still see a ballpark number of the fiscal deficit of what was being projected last year. And hopefully going forward, that fiscal consolidation path should continue. The government emphasis, as I said, should be on capex and specifically on new areas. So strategic autonomy, which is basically Atmanirbhar Bharat, and continued focus on import substitution as well as manufacturing in India should actually be the key focus area in this budget and also going forward from a government policy perspective. One particular thing wherein we have lagged quite a lot is data center, because if you look at in one small city of of America, there are more data center as compared with whole of India. So I am particularly watching what kind of incentives does the government do to encourage that sector, because if you build really large scale data center in this country, it will solve your power issue because power will directly get consummated. It will solve the issue of some amount of hardware, lot of service sector, and this is a heavy capex
Yeah.
item. So a lot of capital at this point of time when we really need the money, actually billions of dollars could pour in if we have favorable policy framework on data center per se. So data center, defense, capex in general, and fiscal consolidation.
Oh, that's very interesting, because these new sectors, these sunrise sectors, if you will, like you're talking about data centers, you're saying that we could see billions of dollars coming in on the back of that. So I guess apart from capex, policy continuity, and autonomy that you were talking about, this is going to be a very close focal point. I'm going to touch upon the fact, Madhu, that you spoke about the increase in the defense sector. And I think that that is something that the markets are really pinning their hopes on this time around. At least a 20% year-on-year spending increase in the defense sector. And this is in light of the fact that we have seen geopolitical tensions, force modernization, this indigenous policy. Are the markets correct in baking in this kind of a jump in defense allocation? And what does that do to the sector?
Actually, if you look at this sector, There's a lot of excitement, and I would say there are a lot which will happen in newer companies, but generally there is defense stock which are listed. They are even now, I would say, reasonably richly valued. So I don't know whether there is a real any compelling opportunity, which is very obvious from a larger defense names. But I think the value will get created in a lot of ancillary sector, which is kind of catering to the defense needs. And we are particularly quite positive and bullish on a lot of private companies, and we are making investment in private side in the defense sector.
Okay, that's interesting to note. But I think, Madhu, what's really on investors' minds right now is the exodus of foreign institutional investors. In the month of mid-Jan alone this year, this 22,000 crore figure, it is very disconcerting. Do you think that it is just going to be macros and earning stability that will bring back the FIIs, or maybe some announcement in the budget that will spur investment or faster decision making, etc.? Will that be an impetus? What will it take to get them back?
So I would say, that the thought process is that the foreigner capital gains will might be get tweeted because they don't pay capital gains anywhere in the world. I would find it very tough in a democratic country like India, wherein you do a tax concession only for foreigners and not for 1.4 billion people who are based in India. So if it is done, it should be done for everyone. However, there is merit in doing something extra for sovereign wealth funds, which are large and long-term investors. So let us see if some kind of incentive or some kind of extra tax concession is being given to sovereign wealth fund that could attract a lot of capital, because they clearly have a lot of capital. They are sitting on trillions of dollars. If I look at all sovereign wealth fund put together, that is where some real FI interest could come in. So that is one again thing to watch for. Is there anything specific being done?
Yes, absolutely. I think that'll be very closely watched out for if anything specific is going to be done on that front. And then, Madhu, one can't ignore those headlines on gold and silver. I mean, it's been eye-popping, the kind of bull run that we saw in prices of gold and then especially silver, absolutely tizzying the kind of movement. And then, of course, that crashed down. And it's just heightened volatility, one could say. Do you think gold as an asset class, given the market capitalization is higher than bonds, that we could see this sort of a shift to gold now continuing? And what's going to happen? Do you think that we could see some import duty changes in gold and silver?
I have maintained very clearly that this is a complete euphoria. Okay. That what you see silver price 25,000 and today at 2,89,000. Right? People who really have we have seen many times in our career, whenever there is this kind of left out feeling and people just run after, this is greed, nothing else but a greed. The silver prices have gone up 3x in 2 years. I don't see a real kind of merit in this kind of a move happening so soon.
Yeah.
So, and that is corrected. You see what happened in 2 years, or maybe 2 months got corrected in 3 days, and that's the nature of the market. So I would still urge all the people who are watching me, please use this as only an asset allocation tool. Okay. Do not go overboard just because the prices are going up. It takes years to build capital, but it can take months or days and minutes for it to evaporate. Even gold prices, if you see 1,82,000 now at 1,35,000. If someone really decided that I want to put 50% of my saving in gold few days back, he would have eroded significant portion of his wealth. Wealth is never being made by chasing things. Wealth is always being made by waiting. It's a wait game. It's a game of patience and not of excitement. So out of excitement, if you go and really put your house anywhere, whether it is the stocks or individual companies or sector or gold or silver, very rarely it has worked out even in the past, and I don't think there is any reason for it to work out even in future. So gold and silver could be an asset allocation in your overall portfolio, but it can't be that it is done at the cost of every other asset class. And you put a meaningful amount of money in gold and silver just because the prices are going up.
Okay, Madhu, I like that you ended with that very important note to all of the investors. Wealth is not built by chasing, it is built by waiting. So do not go overboard with silver. What a pleasure it is to have you on board. Thank you so very much for taking the time out and joining us.
Thank you so much. All the best and have a great day. Thank you so much.
Okay, all the best. And I think we're going to need all of that luck because one can only hope what the finance minister is going to dole out today. Let's see if we're going in with very high expectations or not. And joining us right here in the Motilal Oswal studios in the heart of Mumbai's Prabha Devi is none other than Mr. Ajay Menon. He is the Managing Director and CEO at Motilal Oswal Financial Services. And thank you so very much for taking the time out and joining us today. I think Ajay, there's so many things that are on the market's minds today because we've got the new Fed chief, we've got the uncertainty that's going on globally, gold and silver prices. I don't even know where to begin, but maybe what do you want me to even start with?
Actually, I think it's the first time that during the budget time we have got so much of volatility happening.
Yeah.
And so many different things happening at the same time. Moving parts.
Exactly.
So if you look at it from a market perspective, we are for the last 1 year almost flat. If you look at the thing, mid cap, small cap is going through its own phase.
Yes.
If you look at geopolitically, we know that the things are completely, everybody is thinking about what's the next step going to happen. Yeah. So we are in a situation where we have to look out for ourselves, looking from an India story, that how we are domestically becoming more and more stronger. From a market perspective, if I look at it, market wants to see stability in the whole thing. Market always wants clarity of thought to take things forward. So that is where from the market perspective, if you look at from the metal space, I think there is huge volatility from a good upside to a straight downside. So there again, there is a lot of volatility. So really volatile time in the markets. I think people are looking forward to the budget to get some clear long-term views and what are the views from the government looking at the geopolitical situation, how are we going to take care of the tariff war which is happening and how we can take this forward from here, looking at the domestic strength of the country.
Okay, very interesting comments as well coming in from all of the viewers who are pouring in. And thank you so much once again for tuning in to the budget coverage right here. If you have any specific questions, please do feel free to put them in the comment section. So I just actually wanted to come to that point this time around because we have, like you said, this policy continuity is basically the expectation this time around. But at a time when we are looking at the FII's exodus and the kind of selling that we've witnessed, do you think that we need some sort of a major rabbit out of the finance minister's hat, some decisive policy push, some big bang reform that will actually bring them back? And do you think we'll see that today?
I think from an overall perspective, surely something which we have to look at is that FII is exiting India and the net flows, which has always been negative for the last 1 year. I think that it's more about valuations, which is the biggest factor for FIIs. They had got better opportunities outside when you look at China, Japan and all. So that is where I think we had a short-term negative flows. The overall fundamental story for India is still stronger from a longer-term perspective. And if we get the right valuations in place, the FIIs, I'm sure it's just a matter of time. Looking at the way the domestic has been able to manage the whole negative flows of the FIIs, I think the strength is in the internal stability. So I would say that we just have to leave it to FIIs when they want to come, but they'll surely have to come back looking at the bigger India story which the whole world is talking about. Yeah. And I'm sure the budget will in some way try to see that how we can play to the FII audience to get their perspective in terms of what they are looking at, even from a overall policy framework, much more longer term views, and how the tax burdens are there. I think that is where the FIIs will be trying to look at the overall situation.
But, on the comment section now, while we are streaming live, everyone is saying tax, tax, tax. वो ही mind पे है, सबके mind पे बस tax ही है. And, we saw these sweeping changes last year around with the finance minister. I mean, in the budget, the new income tax regime, and she made it even more attractive for taxpayers. And now with this higher rebate, the tax outgo on income up to 12 lakhs was reduced to 0.
Right.
So what more can she do now when it comes to tax? What more can we realistically, what is the headroom?
So actually, where is the market looking at is that if you recollect, when the STD was brought in, it was brought in at the cost of LTCG being zero, short term being zero, and STD was brought in. But after that, everything has come back and STD has continued. So the thought is that whether there can be some reduction in the STT, or there can be some further exemption on the long-term capital gains. The cash market can be made much more lucrative because that is where the wealth should get created. So that is where the market expectation is, that will there be some rebates coming out there in the long-term capital gains or the STT, so that there cannot be a double burden on the investors from an overall perspective. That is one side of the story. Otherwise, I think it's more about exemptions. Can we increase the exemption part of it? Because for the middle class, I think there is already a lot of given on the table by the finance minister in all these years.
Yeah. Ajay, would you be open to talking in Hindi for our next? Because we have a few requests for maybe English, if you could do that. And this consumption as well, and as per the Motilal Oswal note or report, the sense is that we could see consumption being very targeted rather than widespread. What could this potentially mean for the consumption sector? Could we see something, कुछ हो सकता है budget में big bang reforms consumption के sector के लिए?
Consumption का ही story आज की तारीख में बात हो रहा है, because India is a consumption story. आखिर में the whole model is about, India story is about the population, the overall consumption which can happen. So आज की तारीख में if you look at the overall consumption industry, growth is much more expected over there. So I think whether it is the staples, whether it is the jewelry, whether it is the overall digital players, जैसा Paytm हो या the specific sectors in the digital space, वहाँ से consumption बढ़ ही रहा है, and that is only going to increase. And I think that is where the story is coming out on the overall consumption thing, and I think that is a story which will continue. वो आगे बढ़ के बढ़ना ही है, और आगे I think it will become much more bigger.
Okay, the government has been widely fiscally prudent this time around. Do you think that we will see more firepower, or as Madhu was saying, more policy continuity, more stability in light of the kind of madness that we've seen happen across the globe? That will be the need of the hour?
I think the government will not defocus from the stability. I think they will maintain the stability, that deficit of 4.2 is what they will be trying to look up to. And whatever measures they take, I think they have been always very stable on that fiscal deficit. My view is that government will continue with that continuity rather than trying to do, they can take short-term measures, but not at the cost of the fiscal deficit.
I have to ask you about gold and silver, because it's just been mind-boggling, the kind of movement that we saw. I mean, a 3x return in the last 2 years in silver prices, and then the prices came crashing down. Madhu Kela ended our conversation by saying that wealth is never created by chasing, it is created by waiting. Do not go crazy with this, don't have FOMO. What are you expecting? Anything on, in the budget for commodities, and what should one do?
I think the rally is too big, actually, the way gold and silver has gone up. So I wouldn't say that this is the time to enter. To be very frank, there is a lot of volatility from a retail perspective.
This is the time to enter.
Not
the time to enter. Okay.
The volatility is too high, and it is more of an asset allocation model which you should look at. Rather than looking at putting your assets which is lying in equity into gold, silver, I'm surely not. That is not the time. And the only thing is that it is a hedge towards geopolitical. If the geopolitical things continue, gold can still maintain these levels and be more stable. So, and that is where the whole world is talking, that this geopolitical thing is not going to get over in a hurry. So it is not that gold will crash in a big way, gold, silver, and silver has got its own use in many industries. So the volatility might continue, but I don't think it is going to go the way it went in the last 2-3 years. People will have to look at it from a much more diversification and a hedge kind of strategy.
Okay, so volatility will continue, use it as a hedge strategy. just purely from a market standpoint, the returns have been very varied, Ajay, over the past 10 years or so on budget day, but average is it's very muted.
Yeah.
We know there's not going to be, I mean, I don't think we're going in with expectations that there's going to be a big move or big bang reforms this time around. So we're kick-started a brand new year. What should investors do? Which are the sectors, according to you, that look promising?
I think, see, fundamentally, if you look at it, the India story and the overall market, the large caps are looking much more stable and much more focused if you look at from a longer term. Within the large caps, the banking sector, the consumption story, that is where we are much more comfortable today. And that is where people should look at from a longer term perspective. Mid cap, small cap has seen a huge negative in the last 1 year. So from that perspective, there can be some allocation starting on, but it will take more time because valuations are still not much. It is improved a lot, but still a long way to go. So, but large caps are where the people should be putting their hard-earned money to create the longer-term wealth, and can again, from an allocation perspective, have some allocations to mid-cap, where fundamental story is right. So actually, that is where research comes into picture, where you have got a fundamental story for a stock. Look at those stocks rather than looking at what the Nifty or the Sensex is saying. You have to look at the fundamental stocks where the research is having a strong views and buy onto their stocks and invest on the longer term.
So tell us which ones they are then.
I think I have got limitations to talk about stocks specifically.
Okay, don't talk stocks. Do you have sectors?
Sectors, banking is...
Top three.
Banking, consumption and digital.
And when you're saying look at these sectors, are you buying digital? Okay, are you generally saying stick with some of the large caps, like that's the way to go? It's very stock specific and company specific.
I think see, even again at the end of the day, stocks is where you have to invest, right? You can't invest large cap. You have to invest onto stocks or you have to buy mutual funds. From a retail perspective, mutual funds is the right way to get into the market, whether it is a multi-cap strategy. That is where the whole thing, the retail should come into. We are seeing that also in the SIP flows. And if you are looking at specific stocks, then look at, do your research before you invest.
Okay, do your research before you invest. Tune into Motilal Oswal's
Perfect.
YouTube channel.
Absolutely.
And take the advice from the top guys. I guess that's your clear messaging. Thank you so much, Ajay. What a pleasure it is to get in your
Thanks
day.
a lot, Evan. Really happy to be here. And really happy to see the Motilal Oswal today going live.
Yeah, look at this. We've converted the office into a live studio. Today we're going live. This is absolutely incredible. Courtesy your team and, of course, a lot of the other people behind the scenes. So
Great.
thank you.
Thank you. Thanks a lot.
All right, let's monitor what's happening on the clock right now. It is 10:57. The countdown is officially on with the Finance Minister Nirmala Sitharaman to present the budget this time on a Sunday for the very first time ever. Remember, given the kind of move that we've seen in the market, it's been ever so discouraging, and the kind of geopolitical climate around us hasn't been the best, to say the least. There have been so many tensions going on with respect to the tariffs on one end, ever since you've had the US President Donald Trump come out with those very stark tariffs on India. And we have, of course, seen that acute volatility play out in gold and silver prices. But at the same time, the mutual fund, the new accounts that we have seen, that has been on the uptick for sure. So that is something to at least go by. But yes, indeed, I think that within a short few minutes, do stay tuned, don't go anywhere, because within just a few minutes, the Finance Minister, Nirmala Sitharaman, will be presenting and delivering her 9th straight budget speech in Parliament today. Remember, the aim is to keep the Indian economy in a Goldilocks zone this time around. Growth is expected to remain high, low inflation at the time when we're battling these geopolitical headwinds and the tariff tantrums that have been stoked by the US President Donald Trump. But I think that in large part, unlike the previous years where we have seen the budget speech has been largely focused on part A, which, remember, outlines the planned initiatives, the sectoral strategies, this time around the expectation is that Budget 2026 is likely to devote a significant time to and detail to part B. So sources are saying that there will be a lot more clarity in Part B, and that is going to be a very clear departure from what we've seen in the previous budget announcements, where the section has only consisted of a very few announcements. So this time around, the expectation is that Part B will talk a lot about long-term goals, short-term goals this time around, and talk about India's vision, more importantly, what the priorities are of the country as we are moving deeper into the second quarter of the 21st century. Of course, lots of top priorities include things like job creation to boost India's GDP growth. We've seen for ourselves as well, AI, the layoffs as well. So all of that will be closely watched out for. Perhaps we can have live visuals, I think, on the screens, if we do have that, of the finance minister. As and when we do have that, we will, of course, be cutting across to it. But as of now, there's nothing like that. The markets as well ahead of the budget, they're off the day's lows. Some of those metal stocks continue to remain in the spotlight, but from the day's lows, we've recovered something like 0.5% or so. So Sensex currently quoting at about 82,000 odd levels. For the mid-cap index as well, we've recovered about 1% from the low point of the trading day. Some of those banking stocks as well in the spotlight. There you have it. That's the live footage that we are getting for you as the finance minister will be all set in Parliament to present the budget.
Item number one. Item number one.
Sir, with your permission, I rise to lay on the table a copy each of the following papers, Hindi and English versions, under Article 281 of the Constitution, Report for 2026 to 2031, Volume 1, Main Report of the 16th Finance Commission. 2. Report for 2026-2031, Volume 2, Annexures of the 16th Finance Commission. Number 3. Explanatory memorandum as to the action taken on the recommendations contained in the above report.
Item number 2, माननीय वित्त मंत्री निर्मला सीतारमण जी.
Honorable Speaker, sir, on the sacred occasion of Magh Purnima and the birth anniversary of Guru Ravidas, I present the budget for the year 2026-2027. Since we assumed office 12 years ago, India's economic trajectory has been marked by stability, fiscal discipline, sustained growth, and moderate inflation. This is the result of conscious choices we have made, even in times heightened uncertainty and disruption. Our government, led by Honorable Prime Minister Modi, has decisively and consistently chosen action over ambivalence, reform over rhetoric, and people over populism. We have pursued far-reaching structural reforms, fiscal prudence and monetary stability, whilst maintaining a strong thrust on public investment. Keeping Atmanirbharta as a lodestar, we have built domestic manufacturing capacity, energy security, and reduced critical import dependencies. Simultaneously, we have ensured that citizens benefit from every action of the government, undertaking reforms to support employment generation, agricultural productivity, household purchasing power, and universal services to people. These measures have delivered a high growth rate of around 7% and helped us make substantial strides in poverty reduction and improvement in the lives of our people. Today, we face an external environment in which trade and multilateralism are imperiled and access to resources and supply chains are disrupted. New technologies are transforming production systems while sharply increasing demands on water, energy, and critical minerals. India will continue to take confident steps towards Vikasit Bharat balancing ambition with inclusion. As a growing economy with expanding trade and capital needs, India must also remain deeply integrated with global markets, exporting more and attracting stable long-term investment. As I begin Part A, I want to express my gratitude to the people for standing firmly with us as we forge our way together towards becoming one of the largest economies of the world. Our aim is to transform aspiration into achievement and potential into performance as we ensure that the dividends of growth reach every farmer, the scheduled caste, the scheduled tribes, the nomads, the youth, the poor, and the women. In Vikasit Bharat Young Leaders Dialogue 2026, several innovative ideas were shared with our Prime Minister, which have inspired many of the proposals, making this a unique Yuva Shakti-driven budget. Our government's sankalp is to focus on our poor, underprivileged, and the disadvantaged. To deliver on this sankalp, and given that this is the first budget prepared in Kartavya Bhavan, we are inspired by 3 Kartavya. Our first Kartavya is to accelerate and sustain economic growth by enhancing productivity and competitiveness and building resilience to volatile global dynamics. Our second Kartavya is to fulfill aspirations of our people and build their capacity, making them strong partners in India's path to prosperity. Our third Kartavya, aligned with our vision of Sabka Saath, Sabka Vikas, is to ensure that every family, community, region, and sector has access to resources, amenities, and opportunities for meaningful participation. This threefold approach requires a supportive ecosystem. The first requirement is to sustain the momentum of structural reforms, continuous, adaptive, and forward-looking. Second, a robust and resilient financial sector is central to mobilizing savings, allocating capital efficiently, and managing risks. Third, cutting-edge technologies, including AI applications, can serve us as force multipliers for better governance. Reform Express. Our government has undertaken comprehensive reforms towards creating employment, boosting productivity, and accelerating growth. After the Prime Minister's announcement on Independence Day in 2025, over 350 reforms have been rolled out. This includes GST simplification, notification of labor codes, and rationalization of mandatory quality control orders. High-level committees have been formed, and in parallel, the central government is working with the state governments on deregulation and reducing compliance requirements. The Reform Express is well on its way and will maintain its momentum to help us fulfill our Kartavya. I now move to specific proposals. Under our first Kartavya, to accelerate and sustain economic growth, I propose interventions in 6 areas. 1. Scaling up manufacturing in 7 strategic and frontier sectors. 2. Rejuvenating legacy industrial sectors. 3. Creating champion MSMEs. 4. Delivering a powerful push for infrastructure. 5. Ensuring long-term security and stability. And 6. Developing city economic regions. scaling up of manufacturing in 7 strategic and frontier sectors. Biopharma Shakti, meaning biopharma strategy for health advancement through knowledge, technology, and innovation. India's disease burden is observed to be shifting towards non-communicable diseases like diabetes, cancer, and autoimmune disorders. Biologic medicines are key to longevity and quality of life at affordable costs. To develop India as a global biopharma manufacturing hub, I propose the Biopharma Shakti with an outlay of 10,000 crores over the next 5 years. This will build the ecosystem for domestic production of biologics and biosimilars. The strategy will include a biopharma-focused network with 3 new national institutes of pharmaceutical education and research, popularly known as NIPERs, and upgrading 7 existing ones. It will also create a network of 1,000 accredited India clinical trials sites. We propose to strengthen the Central Drug Standard Control Organization to meet global standards and approve timeframes through approval timeframes through a dedicated scientific review cadre and specialists. India's Semiconductor Mission 1.0 expanded India's semiconductor sector capabilities. Building on this, we will launch ISM 2.0 to produce equipment and materials, design full-stack Indian IP, and fortify supply chains. We will also focus on industry-led research and training centers to develop technology and skilled workforce. The Electronics Components Manufacturing Scheme, launched in April 2025, with an outlay of 22,919 crores, already has investment commitments at double the targets. We propose to increase the outlay to 40,000 crores to capitalize on this momentum. A scheme for rare earth permanent magnets was launched in 2025 November. We now propose to support the mineral-rich states of Odisha, Kerala, Andhra Pradesh, and Tamil Nadu to establish dedicated rare earth corridors to promote mining, processing, research, and manufacturing. To enhance domestic chemical production and reduction import dependency and reduce import dependency, we will launch a scheme to support states in establishing 3 dedicated chemical parks through challenge route on a cluster-based plug-and-play model. Strong capital goods. Strong capital goods capability is a determinant of productivity and quality across different sectors. Towards building this capacity, I propose the following. High-tech tool rooms will be established by central public sector enterprises at 2 locations as digitally enabled automated service bureaus that locally design, test, and manufacture high-precision components at scale and at lower cost. 2, a scheme for enhancement of construction and infrastructure equipments will be introduced to strengthen domestic manufacturing of high value and technologically advanced CIE. This can range from lifts in a multi-storied apartment or firefighting equipment in multiplexes, large or small, and to tunnel boring equipments for building metros and high-altitude roads. I also propose a scheme for container manufacturing to create a globally competitive container manufacturing ecosystem with a budgetary allocation of 10,000 crores over a 5-year period. For the labor-intensive textile sector, I propose an integrated program with 5 subparts. 1. The National Fiber Scheme for self-reliance in natural fibers, such as silk, wool, and jute, man-made fibers, and new-age fibers. Textile expansion and employment scheme to modernize traditional clusters with capital support for machinery, technology upgradation, and common testing and certification centers. 3. The National Handloom and Handicraft Program to integrate and strengthen existing schemes and ensure targeted support for weavers and artisans. Tex Eco Initiative to promote globally competitive and sustainable textiles and apparels. Samarth 2.0 to modernize the upgrade the textile skilling ecosystem through collaboration with industry and academic institutions. Further, I propose to set up mega textile parks in challenge mode. They can also focus on bringing value addition to technical textiles. I propose to launch the Mahatma Gandhi Gram Swaraj initiative to strengthen khadi, handloom, and handicrafts. This will help in global market linkage and branding. It will streamline and support training, skilling, quality of process, and production. This will benefit our weavers, village industries, one district, one product, ODOP initiative, and also our rural youth. India has the potential to emerge as a global hub for high quality, affordable sports goods. I propose a dedicated initiative for sports goods that will promote manufacturing, research, and innovation in equipment design as well as material sciences. Rejuvenation of legacy industrial clusters. I propose to introduce a scheme to revive 200 legacy industrial clusters to improve their cost competitiveness and efficiency through infrastructure and technology upgradation. Creating champion SMEs and supporting micro enterprises. Recognizing MSMEs as a vital engine of growth, I propose a 3-pronged approach to help them grow as champions. Equity support. I propose to introduce a dedicated 10,000 crores SME growth fund to create future champions, incentivizing enterprises based on select criteria. I also propose to top up the Self-Reliant India Fund set up in 2021 with 2,000 crores to continue support to micro enterprises and maintain their access to risk capital. Liquidity support. With TREDS, more than 7 lakh crore has been made available to MSMEs. To leverage its full potential, I propose 4 measures. 1. Mandate TREDS as the transaction settlement platform for all purchases from MSMEs by CPSEs, serving as a benchmark for other corporates. 2. Introduce a credit guarantee support mechanism through CGT-MSE for invoice discounting on TREDS platform. 3. Link GEM with TREDS for sharing information with financiers about government purchases from MSMEs, encouraging cheaper and quicker financing. 4. Introduce TREDS receivables as asset-backed securities, helping develop a secondary market, enhancing liquidity and settlement of transactions. Professional support. Government will facilitate professional institutions such as the ICAI, ICSI, ICMAI, to design short-term modular courses and practical tools to develop a cadre of corporate mitras, especially in Tier 2 and Tier 3 towns. These accredited para-professionals will help MSMEs meet compliance requirements at affordable costs. Infrastructure. During this past decade, our government has undertaken several initiatives for large-scale enhancement of public infrastructure, including through new financing instruments such as Infrastructure Investment Trust (InvITs) and Real Estate Investment Trust (REITs), and institutions like NIIF and NABFID. We shall continue to focus on developing infrastructure in cities with over 5 lakh population, that is Tier 2, Tier 3 cities, which have expanded to become growth centers. Public capital expenditure has increased manifold from 2 lakh crore in 2014-15 to an allocation of 11.2 lakh crore in BE 25-26. In this coming year, that is financial year 2026-27, I propose to increase it to 12.2 lakh crores to continue the momentum. To strengthen the confidence of private developers regarding risks during infrastructure development and construction phase, I propose to set up an infrastructure risk guarantee fund to provide prudentially calibrated partial credit guarantee to lenders. Over the years, REITs have emerged as a successful instrument for asset monetization. I propose to accelerate recycling of significant real estate assets of the CPSEs through the setting up of dedicated REITs. To promote environmentally sustainable movement of cargo, I propose to 1. Establish new dedicated freight corridors connecting Dankuni in the east to Surat in the west. Operationalize 20 new national waterways over the next 5 years. Starting with National Waterways 5 in Orissa to connect mineral-rich areas of Talcher and Angul and industrial centers like Kalinga Nagar to the ports of Paradeep and Dhamra. Training institutes will be set up as regional centers of excellence for development of required manpower for these waterways. This will benefit youth in the entire stretch of the waterways to train and acquire skills. Further, a ship repair ecosystem catering to inland waterways will also be set up at Varanasi and Patna. And C, launch a coastal cargo promotion scheme for incentivizing a modal shift from rail to road to increase the share of inland waterways and coastal shipping from 6% to 12% by 2047. To enhance last mile and remote connectivity and promote tourism, I propose to give incentives to indigenize manufacturing of seaplanes. A seaplane VGF scheme will be also introduced to provide support for operations. Carbon capture, utilization and storage. Aligning with the roadmap launched in December 2025, the carbon capture, utilization and storage technologies at scale will achieve higher readiness and in end-use application across 5 industrial sectors, including power, steel, cement, refineries, and chemicals. An outlay of 20,000 crore is proposed over the next 5 years for this purpose. City economic regions. Cities are India's engines of growth, innovation, and opportunities. We shall now focus on Tier 2, Tier 3 cities, and even temple towns, which need modern infrastructure and basic amenities. This budget aims to further amplify the potential of cities to deliver the economic power of agglomerations by mapping city economic regions based on their specific growth drivers. An allocation of 5,000 crore per CER over 5 years is proposed for implementing their plans through a challenge mode with a reform-cum-result-based financing mechanism. In order to promote environmentally sustainable passenger systems, we will develop 7 high-speed rail corridors between cities as growth connectors, namely Mumbai to Pune, Pune to Hyderabad, Hyderabad to Bengaluru, Hyderabad to Chennai, Chennai to Bengaluru, Delhi to Varanasi, Varanasi to Siliguri. Financial sector. The Indian banking sector today is characterized by strong balance sheet, historic highs in profitability, improved asset quality, and coverage exceeding 98% of villages in the country. At this juncture, we are well placed to futuristically evaluate the measures needed to continue on the path of reform-led growth of this sector. I propose setting up a high-level committee on banking for Vikasit Bharat. High-level committee on banking for Vikasit Bharat to comprehensively review the sector and align it with India's next phase of growth, while safeguarding financial stability, inclusion, and consumer protection. The vision for NBFCs for Vikasit Bharat has been outlined with clear targets for credit disbursement and technology adoption in order to achieve scale and improve efficiency in the public sector NBFCs. As a first step, it is proposed to restructure the Power Finance Corporation and Rural Electrification Corporation. I propose a comprehensive review of the foreign exchange management non-debt instruments rules to create a more contemporary, user-friendly framework for foreign investments consistent with India's evolving economic priorities. Corporate bond market. I propose to introduce a market-making framework with suitable access to funds and derivatives on corporate bond indices. I also propose to introduce total return swaps on corporate bonds. Municipal bonds. To encourage the issuance of municipal bonds of higher value by larger cities, I propose an incentive of 100 crore rupees for a single bond issuance. 100 crore rupees for a single bond issuance of more than 1,000 crore. The current scheme under Amrit which incentivizes issuances up to 200 crores only, will also continue to support smaller and medium towns. That will also continue to support the smaller and medium towns. Ease of doing business. Individual persons resident outside India, PROI, will be permitted to invest in equity instruments of listed Indian companies through the Portfolio Investment Scheme. It is also proposed to increase the investment limit for an individual PROI under the scheme from 5% to 10%, with an overall investment limit for all individual PROIs to 24% from the current 10%. Emerging technologies including AI. 21st century is technology-driven. Adoption of technology is for the benefit of all people. Farmers in the field, women in STEM, youth keen to upskill, and Divyangjan to access newer opportunities. The government has taken several steps to support new technologies through AI Mission, National Quantum Mission, Anusandhan National Research Fund, and Research and Development and Innovation Fund. Our second kartavya is to fulfill aspirations and build capacities. Close to 25 crore individuals have come out of multi-dimensional poverty through a decade of our government's sustained and reform-oriented efforts. Our government has therefore decided to place a renewed emphasis on the service sector to provide a pathway to fulfilling aspirations of a youthful India with the following measures. I propose to set up a high-powered education to employment and enterprises standing committee to recommend measures that focus on services sector as a core driver of Vikasit Bharat. This will make us a global leader in services with a 10% global share by 2047. The committee will prioritize areas to optimize the potential for growth, employment, and exports. They will also assess the impact of emerging technologies, including AI, on jobs and skill requirements and propose measures thereof. To create a range of skilled career pathways, a new range of skilled career pathways for our youth, I propose interventions in the following sectors. Health. Existing institutions for allied health professionals will be upgraded and new AHP institutions established in private and government sectors. This will cover 10 selected disciplines, including optometry, radiology, anesthesia, OT technology, applied psychology, and behavioral health, and add 1 lakh AHPs over the next 5 years. A strong care system covering geriatric and allied care services will be built. A variety of NSQF-aligned programs will be developed to train multi-skilled caregivers, combining core care and allied skills such as wellness, yoga, and operation of medical assistive devices. In the coming year, 1.5 lakh caregivers will be trained. Hubs for medical value tourism. To promote India as a hub for medical tourism services, I propose to launch a scheme to support states in establishing 5 regional medical hubs in partnership with the private sector. These hubs will serve as integrated healthcare complexes that combine medical, educational, and research facilities. They will have Ayush centers, medical value tourism facilitation centers, and infrastructure for diagnostics, post-care, and rehabilitation. These hubs will provide diverse opportunities, job opportunities for health professionals, including doctors and AHPs. Ancient Indian yoga, already respected in several parts of the world, was given a mass global recognition when Honorable Prime Minister took it to the UN. Post-COVID, Ayurveda gained a similar global acceptance and recognition. Exporting quality Ayurveda products helps farmers who grow the herbs and youth who process the products. To meet growing global demand, a few more steps are being taken. I propose to, 1, set up 3 new All India Institutes of Ayurveda. 2, upgrade Ayush pharmacies and drug testing labs for higher standards of certification ecosystem and make available more skilled personnel. 3, upgrade the WHO Global Traditional Medicine Center in Jamnagar to bolster evidence-based research, training, and awareness for traditional medicine. Animal husbandry. Livestock contributes to close to 16% of farm income, including of poor and marginal households. To scale up availability of veterinary professionals by more than 20,000, I propose to roll out a loan-linked capital subsidy support scheme for establishment of veterinary and para-veterinary colleges, veterinary hospitals, diagnostic laboratories, and breeding facilities in private sector. Collaboration between Indian and foreign institutions will also be facilitated. Orange economy. India's animation, visual effects, gaming and comics sector, AVGC sector, is a growing industry projected to require 2 million professionals by 2030. I propose to support the Indian Institute of Creative Technologies, Mumbai, in setting up AVGC content creator labs in 15,000 secondary schools all over the country and 500 colleges. The Indian design industry is expanding rapidly, and yet there is a shortage of Indian designers. I propose to establish, through Challenge Route, a new National Institute of Design to boost design education and development in the eastern region of India. Education. Our government will support states through Challenge Route in creating 5 university townships in the vicinity of major industrial and logistics corridors. These planned academic zones will host multiple universities, colleges, and research institutions, skill centers, and residential complexes. In higher education, STEM institutions prolong the hours of study and laboratory work pose some challenges for girl students. Through VGF, Viability Gap Funding and capital support, 1 girls' hostel will be established in every district. To promote astrophysics and astronomy via immersive experiences, 4 telescope infrastructure facilities will be set up or upgraded. The National Large Solar Telescope, the National Large Optical Infrared Telescope, the Himalayan Chandra Telescope, and the Cosmos 2 Planetarium. Tourism. The tourism sector has the potential to play a large role in the employment generation, forex earnings, and expanding the local economy. I propose to set up a National Institute of Hospitality by upgrading the existing National Council for Hotel Management and Catering Technology. It will function as a bridge between academia, industry, and government. I also propose a pilot scheme for upskilling 10,000 guides in 20 iconic tourist sites through a standardized, high-quality, 12-week training course in hybrid mode in collaboration with the Indian Institute of Management. a national destination digital knowledge grid will be established to digitally document all places of significance, cultural, spiritual, and heritage. This initiative will create a new ecosystem of jobs for local researchers, historians, content creators, and technology partners. India has the potential and opportunity to offer world-class trekking and hiking experience. We will develop ecologically sustainable mountain trails in Himachal Pradesh, Uttarakhand, and Jammu Kashmir. Also in Araku Valley in the Eastern Ghats and Podigai Malai in the Western Ghats. Turtle trails along key nesting sites in the coastal areas of Odisha, Karnataka, and Kerala. And 3, bird watching trails along the Pulikat Lake in Andhra Pradesh, Tamil Nadu. It's on the border. Under the visionary leadership of Honorable Prime Minister, we established the International Big Cat Alliance in 2024. This year, India is hosting the first ever Global Big Cat Summit, where heads of governments and ministers from 95 range countries will deliberate on collective strategies for conservation. Heritage and culture tourism. I propose to develop 15 archaeological sites, including Lothal, Dolavira, Rakhi Gadi, Adichanallur, Saranath, Hastinapur, and Leh Palace into vibrant experiential cultural destinations. Excavated landscapes will be open to the public through curated walkways. Immersive storytelling skills and technologies will be introduced to help conservation labs, interpretation centers, and guides. The sports sector provides multiple means of employment, skilling, and job opportunities. Taking forward the systematic nurturing of sports talent, which is set in motion through the Kelo India program earlier, I propose to launch a Kelo India mission to transform the sports sector over the next decade. The mission will facilitate an integrated talent development pathway supported by training centers, which are foundational, intermediate, and elite levels. B, systematic development of coaches and support staff. C, integration of sports science and technology. D, competitions and leagues to promote sports culture and provide platforms. And E, development of sports infrastructure for training and competition. Our third Kartavya aligns with our vision of Sabka Saath, Sabka Vikas towards Vikasit Bharat. This requires targeted efforts for 1, increasing farmer incomes through productivity enhancement and entrepreneurship, with special attention to small and marginal farmers. B, empowering Divyangjan through access to livelihood opportunities, training, and high-quality assistive devices. C, empowering the vulnerable to access mental health and trauma care. D, focus on the Purvodaya states and the Northeast region to accelerate development and employment opportunities. Fisheries. We will undertake initiatives for integrated development of 500 reservoirs and Amrit Sarovars. 2, strengthen the fisheries value chain in coastal areas and enable market linkages involving startups and women-led groups together with fish farmer producer organizations. Animal husbandry. To provide quality employment opportunities in rural and peri-urban areas, we will support the animal husbandry sector in entrepreneurship development through A credit-linked subsidy program, B, scaling up and modernization of livestock enterprises. C, enhanced creation of livestock, dairy and poultry. Enhanced creation of livestock, dairy and poultry focused integrated value chains. And D, encourage creation of livestock farmer producer organizations. High value agriculture. To diversify farm outputs, increase productivity, enhance farmers' incomes, and create new employment opportunities, we will support high-value crops such as coconut, sandalwood, cocoa, cashew in the coastal areas, agar trees in northeast, and nuts such as almonds, walnuts, and pine nuts in our hilly regions. All of them will be supported. India is the world's largest producer of coconuts. About 30 million people, including nearly 10 million farmers, depend on coconuts for their livelihood. To further enhance competitiveness in coconut production, I propose a coconut promotion scheme to increase production and enhance productivity through various interventions, including replacing and non-productive trees with new saplings or plants or varieties in major coconut growing states. A dedicated program is proposed for Indian cashew and cocoa to make India self-reliant in raw cashew and coconut production and processing, enhance export competitiveness, and transform Indian cashew and Indian cocoa into premium global brands by 2030. Sandalwood. Sandalwood is closely linked to India's social and cultural heritage. Our government will partner with state governments to promote focused cultivation and post-harvest processing to restore the glory of the Indian sandalwood ecosystem, to rejuvenate old, low-yielding orchards, and expand high-density cultivation of walnuts, almonds, and pine nuts. We will support a dedicated program to enhance farmer incomes and in bringing value addition by engaging youth. Bharat Vistar, that is virtually integrated system to access agricultural resources. I propose to launch Bharat Vistar, a multilingual AI tool that shall integrate the AgriStack portals and the ICAR package on agricultural practices with AI systems. This will enhance farm productivity, enable better decisions for farmers, and reduce risk by providing customized advisory support. She-Marts for rural women-led enterprises. Building on the success of Lakpati Didi program, I propose to help women take the next step from credit-linked livelihoods to being owners of enterprises. Self-help entrepreneur, She-Marts will be set up as community-owned retail outlets within the cluster-level federations through enhanced and innovative financing instruments. Empowering Divyangjan. Divyangjan Kaushal Yojana. Information technology, AVGC sectors, hospitality and food and beverages sectors often offer task-oriented and process-driven roles which are suitable for Divyangjan. We will ensure dignified livelihood opportunities through industry-relevant and customized training specific to each Divyangjan group. Divyang Sahara Yojana. Timely access to high-quality assistive devices for all eligible Divyangjan is a fundamental need. I propose to, 1, support the Artificial Limbs Manufacturing Corporation of India, Alimco, to set up and to scale up production of assistive devices. invest in R&D and AI integration, strengthen PM Divyasha Kendras, and support setting up of assistive technology marts as modern retail style centers where Divyangjan and senior citizens can see, try and purchase assistive products. Reaffirming our commitment to mental health and trauma care. There are no national institutes for mental health care in North India. We will therefore set up a NIMHANS 2 and also upgrade national mental health institutes in Ranchi and in Tezpur as regional apex institutions. Emergencies expose families, particularly the poor and vulnerable, to unexpected expenditure. We will strengthen and increase these capacities by 50% in district hospitals by establishing emergency and trauma care centers. Focus on Purvodaya states and northeastern regions. Purvodaya, I propose the development of an integrated East Coast industrial corridor with a well-connected node at Durgapur, creation of 5 tourism destinations in 5 Purvodaya states, and the provision of 4,000 e-buses. Buddhist sites in northeastern region. The northeastern region is a civilizational confluence of Theravada and Mahayana or Vajrayana traditions. I propose to launch a scheme for development of Buddhist circuits in Arunachal Pradesh, Sikkim, Assam, Manipur, Mizoram, and Tripura. The scheme will cover preservation of temples and monasteries, pilgrimage interpretation centers, connectivity, and pilgrim amenities. 16th Finance Commission. On 17th November 2025, the 16th Finance Commission submitted its report to the President. As mandated under Article 281 of the Constitution, the government is to lay the report along with the explanatory memorandum on the action taken report on the recommendations of the Commission in Parliament, which, Sir, Honourable Speaker, you've allowed me to do at the commencement of this session. The government has accepted the recommendation of the Commission to retain the vertical share of devolution at 41%. As recommended by the Commission, I have provided 1.4 lakh crores of rupees to the states for the year 2026-2027 as Finance Commission grants. These include rural and urban local body and disaster management grants. Fiscal consolidation. Government has been delivering on our fiscal commitments consistently without compromising on social needs. To strive towards accepted standards of fiscal management in Budget 25-26, I had indicated that the central government would target reaching a debt to GDP ratio of 50 plus or minus 1% by 2030-31. In line with this, the debt to GDP ratio is estimated to be 55.6% of GDP in BE 26-27, compared to 56.1% of GDP in RE 25-26. A declining debt to GDP ratio will gradually free up resources for priority sector lending and expenditure by reducing the outgo on interest payments. One of the main operational instruments for debt targeting is the fiscal deficit. I am happy to inform this august House that I fulfilled my commitment made in 2021-2022 to reduce fiscal deficit below 4.5% of GDP by 25-26. In RE 25-26, the fiscal deficit has been estimated at par with BE of 25-26 2025-26 at 4.4% of GDP. In line with the new fiscal prudence path of debt consolidation, the fiscal deficit in BE 26-27 is estimated to be 4.3% of the GDP. The revised estimates of the non-debt receipts are 34 lakh crore rupees, of which the centre's net tax receipts are 26.7 lakh crore. The revised estimate of the total expenditure is 49.6 lakh crore rupees, of which the capital expenditure is about 11 lakh crores. Budget estimates 2026 to 2027. Coming to 26-27, the non-debt receipts and the total expenditure are estimated as 36.5 lakh crore and 53.5 lakh crore respectively. The centre's net tax receipts are estimated at 28.7 lakh crore rupees. To finance the fiscal deficit, the net market borrowings from dated securities are estimated at 11.7 lakh crore rupees. The balance financing is expected to come from small savings and other sources. The gross market borrowings are estimated at 17.2 lakh crore rupees. I'll now move to Part B. Part B, direct taxes. Honorable Speaker, sir, I now present my proposals on direct taxes. New Income Tax Act. In July 2024, I announced a comprehensive review of the Income Tax Act 1961. This was completed in a record time, and the Income Tax Act 2025 will come into effect from 1st April 2026. The simplified income tax rules and forms will be notified shortly, giving adequate time to taxpayers to acquaint themselves with its requirements. The forms have been redesigned such that ordinary citizens can comply without difficulty. Ease of living. I propose that any interest awarded by the Motor Accident Claims Tribunal to a natural person will be exempt from income tax, and any TDS on this account will be done away with. I propose to reduce TCS rate on the sale of overseas tour program package from the current 5% and 20% to 2% without any stipulation of amount. I propose to reduce TCS rate for pursuing education and for medical purposes under the Liberalized Remittance Scheme, popularly known as LRS, from 5% to 2%. Supply of manpower services is proposed to be specifically brought within the ambit of payment to contractors for the purpose of TDS to avoid ambiguity. Thus, TDS on these services will be at the rate of either 1% or 2% only. I propose a scheme for small taxpayers, wherein a rule-based automated process will enable obtaining a lower or nil deduction certificate instead of filing an application with the assessing officer. For the ease of taxpayer holding securities in multiple companies, I propose to enable depositories to accept Form 15G or Form 15H from the investor and provide it directly to various relevant companies. I propose to extend time available for revising returns from 31st December to up to 31st March with the payment of a nominal fee. I also propose to stagger the timeline for filing of tax returns. Individuals with ITR 1 and ITR 2 returns will continue to file till 31st July, and non-audit business cases or trusts are proposed to be allowed time till 31st August. TDS on sale of immovable property by a non-resident is proposed to be deducted and deposited through resident buyers and his or her PAN-based challan instead of requiring a TAN, which is a temporary accounting number. To address practical issues of small taxpayers like students, young professionals, tech employees, relocated NRIs, and such others, I propose to introduce a one-time 6-month foreign asset disclosure scheme for these taxpayers to disclose income or assets below a certain size. This scheme would be applicable for two categories of taxpayers, namely, A, who did not disclose their overseas income or assets, and B, who disclosed their overseas income and or paid due tax but could not declare the asset acquired. For category A, the limit of undisclosed income or asset is proposed to be up to 1 crore rupees. They need to pay 30% of fair market value of asset or 30% of undisclosed income as tax and 30% as additional income tax in lieu of penalty and would thereby get immunity from prosecution. For category B, asset value is proposed to be up to 5 crore rupees. Here, immunity from both penalty and prosecution will be available with a payment of fee of 1 lakh rupees. Rationalizing penalty and prosecution. Multiplicity of proceedings are hindrance to the ease of doing business. I propose to integrate assessment and penalty proceedings by way of a common order for both. There will be no interest liability on the taxpayer on the penalty amount for the period of appeal before the first appellate authority, irrespective of the outcome of appeal process. Further, quantum of prepayment is being reduced from 20% to 10% and will continue to be calculated only on core tax demand. As an additional measure for reducing litigation, I propose to allow taxpayers to update their returns even after reassessment proceedings have been initiated, and an additional 10% tax rate over and above the rate applicable for the relevant year. The assessing officer will then use only this updated return in his proceedings. There is already a framework for immunity from penalty and prosecution in the cases of underreporting. I propose to apply this framework for immunity to misreporting too. However, in such a case, the taxpayer will need to pay 100% of the tax amount as an additional income tax over and above the tax and interest due. Penalties for certain technical defaults, such as failure to get accounts audited, non-furnishing of transfer pricing audit report, and default in furnishing statement for financial transactions are proposed to be converted into fee. I propose to rationalize prosecution framework under Income Tax Act while maintaining a careful balance for deterrence in some serious offense. Non-production of books of account and documents and requirement of TDS payment where payment is made in kind are being decriminalized. Further, minor offenses will attract fine only. The remaining prosecutions will be graded commensurate with the quantum of offense. They will entail only simple imprisonment with maximum imprisonment reduced to 2 years and power to courts to convert even those into fines. There is no penalty. There is no penalty presently for non-disclosure of non-immovable foreign assets with aggregate value less than 20 lakh rupees. I propose to also provide them with immunity from prosecution with retrospective effect from 1/10/2024. Cooperatives. Deduction is already allowed to a primary cooperative society engaged in supplying milk, oilseeds, fruits or vegetables raised or grown by its members. I propose to extend this deduction to also include supply of cattle feed and cotton seed produced by its members. I propose to allow inter-cooperative society dividend income as deduction under the new tax regime to the extent it is further distributed to its members. I further propose to allow exemption for a period of 3 years to dividend income received by a notified national cooperative federation on their investments made in companies up to 31/1/2026. This exemption would be allowed only for dividends further distributed to its member cooperatives. Supporting IT sector as India's growth engine. India is a global leader in software development services, IT-enabled services, knowledge process outsourcing services, and contract R&D services relating to software development. These businesses and their segments are quite interconnected with each other. All these services are proposed to be clubbed under a single category of information technology services with a common safe harbor margin of 15.5% applicable to all. The threshold for availing safe harbor for IT services is being enhanced substantially from 300 crore rupees to 2,000 crore rupees. Safe harbor for IT services shall be approved by an automated rule-driven process without any need for tax officer to examine and accept the application. Once applied by an IT services company, the same safe harbor can be continued for a period of 5 years at a stretch at its choice. For IT services companies who want to conclude advanced pricing agreement, APA, I propose to fast-track unilateral APA process for IT services and endeavor to conclude it within a period of 2 years. The period of 2 years can be extended by a further period of 6 months on taxpayers' request. I propose to extend the facility of modified returns available to the entity entering APA to its associated entities also. Attracting global business and investment. Recognizing the need to enable critical infrastructure and boost investment in data centers, I propose to provide tax holiday till 2047 to any foreign company that provides cloud services to customers globally by using data center services from India. It will, however, need to provide services to Indian customers through an Indian reseller entity. I also propose to provide a safe harbor of 15% on cost in case the company providing data center services from India is a related entity. To harness the efficiency of just-in-time logistics for electronic manufacturing, I propose to provide safe harbor to non-residents for component warehousing in a bonded warehouse at a profit margin of 2% of the invoice value. The resultant tax of about 0.7% will be much lower than in competing jurisdictions. To provide fillip to toll manufacturing in India, I propose to provide exemption from income tax for 5 years to any non-resident who provides capital goods, equipment, or tooling to any toll manufacturer in a bonded zone. To encourage vast pool of global talent to work in India for a longer period of time, I propose to provide exemption to global, non-India sourced income of a non-resident expert for a stay period of 5 years under notified schemes. I propose to provide exemption from minimum alternate tax, the MAT, to all non-residents who pay tax on presumptive basis. Tax administration. I propose to constitute a joint committee of Ministry of Corporate Affairs and Central Board of Direct Taxes for incorporating the requirements of income computation and disclosure standards, the ICDS, in the Indian Accounting Standards, Ind AS itself. Separate accounting requirement based on ICDS will be done away with from the tax year 27-28. To support Prime Minister Modi's vision of homegrown accounting and advisory firms to become global leaders, I propose to rationalize the definition of accountant for the purposes of safe harbor rules. Other tax proposals. Change in taxation of buyback was brought in to address the improper use of buyback route by promoters. In the interest of minority shareholders, I propose to tax buyback for all types of shareholders as capital gains. However, to disincentivize misuse of tax arbitrage, promoters will pay an additional buyback tax. This will make effective tax 22% for corporate promoters. For non-corporate promoters, the effective tax will be 30%. TCS rate for sellers of specific goods, namely alcoholic liquor, scrap, and minerals, will be rationalized to 2%, and that on tendu leaves will be reduced from 5% to 2%. I propose to raise the STT on futures to 0.05% from the present 0.02%. STT on options premium and exercise of options are both proposed to be raised to 0.15% from the present rate of 0.1% and 0.125% respectively. We reformed the taxation landscape for corporates in 2019 by providing them a simplified regime with lower tax rate so that they could productively focus on business rather than on claim of deductions and exemptions. To encourage companies to shift to the new regime, set off of brought forward MAT credit, minimum alternate tax credit, is proposed to be allowed to companies only in the new regime. Set off using available MAT credit is proposed to be allowed to an extent of 1/4 of the tax liability in the new regime. MAT is proposed to be made final tax, so there will be no further credit accumulation from 1st April 2026. In line with this change, the rate of final tax is being reduced to 14% from the current MAT rate of 15%. The brought forward MAT credit of taxpayers accumulated till 30th March 2026 will continue to be available to them for set-off as above. Indirect taxes. I shall now take up proposals related to indirect taxes. My proposals for customs and central excise aim to further simplify the tariff structure, support domestic manufacturing, promote export competitiveness, and correct inversion in duty. To continue weeding out long-continuing customs duty exemptions, I propose to remove certain exemptions on items which are being manufactured in India or where the imports are negligible. Similarly, to further simplify the process of ascertaining the rate of duty applicable on a particular item, I propose to incorporate certain effective rates in various customs notifications to the tariff schedule itself. I shall now take up sector-specific proposals. Promotion of exports of marine, leather, and textile products. I propose to increase the limit for duty-free imports of specified inputs used for processing seafoods for export from the current 1% to 3% of FOB value of the previous year's export turnover. I also propose to allow duty-free imports of specified inputs, which is currently available for exports of leather or synthetic footwear, to exports of shoe uppers as well. I propose to extend the time period for export of final product from the existing 6 months to 1 year for exporters of leather or textile garments, leather or synthetic footwear, and other leather products. Energy transition and security. I propose to extend the basic customs duty exemption given to capital goods used for manufacturing lithium-ion cells for batteries to those used for manufacturing lithium-ion cells for battery energy storage systems also. I propose to exempt basic customs duty on import of sodium antimonate for use in manufacture of solar glass. Nuclear power. I propose to extend the existing basic customs duty exemption on imports of goods required for nuclear power projects till the year 2035 and expand it for all nuclear plants irrespective of their capacity. Critical minerals. It is proposed to provide basic customs duty exemption to the import of capital goods required for the processing of critical minerals in India. Biogas blended CNG. I propose to exclude the entire value of biogas while calculating the central excise duty payable on biogas blended CNG. Civil and defense aviation. I propose to exempt basic customs duty on components and parts required for the manufacture of civilian training and other aircrafts. It is proposed to exempt basic customs duty on raw materials imported for the manufacture of parts of aircraft to be used in maintenance, repair, or overall requirements by units in the defense sector. Electronics. To deepen value addition in the consumer electronics sector, I propose to exempt basic customs duty on specified parts used in the manufacture of microwave ovens. Special economic zone. To address the concerns arising about utilization of capacity by manufacturing units in the special economic zones due to global trade disruptions, I propose as a special one-time measure to facilitate sales by eligible manufacturing units in SEZs to the domestic tariff area at concessional rates of duty. The quantity of such sales will be limited to a prescribed proportion of their exports. Necessary regulatory changes will be undertaken to operationalize the measures while ensuring level playing field for the units working in the DTA. Ease of living. To rationalize the customs duty structure for goods imported for personal use, I propose to reduce the tariff rate on all dutiable goods imported for personal use from 20% to 10%. To provide relief to patients, particularly those suffering from cancer, I propose to exempt basic customs duty on 17 drugs or medicines. I propose also to add 7 more rare diseases for the purposes of exempting import duties on personal imports of drugs, medicines, and food for special medical purposes used in their treatment. Customs process. India's role and share in the global trade is poised for a major leap in line with our ambition and journey towards Vikasit Bharat. In this regard, I propose many measures for custom processes to have minimal intervention for smoother and faster movement of goods and greater certainty to the trade. Trust-based systems. I propose to enhance duty deferral period for Tier 2 and Tier 3 authorized economic operators, known as AEOs, from 15 days to 30 days. I propose to provide eligible manufacturer importers the same duty deferral facility. This should encourage them to get themselves accredited as a full-fledged Tier 3 AEO in due course. To provide greater certainty and for better business planning, I propose to extend validity period of advance ruling binding on customs from the present 3 years to 5 years. In the spirit of the whole of government approach, government agencies will be encouraged to leverage AEO accreditation for preferential treatment in clearing their cargo. Regular importers with trusted, long-standing supply chains will be recognized in the risk system so that the need for verification of their cargo every time can be minimized. Export cargo using electronic sealing. Export cargo using electronic sealing will be provided through clearance from the factory premises to the ship. For import of goods not needing any compliance, filing of bill of entry by a trusted importer and arrival of goods will automatically notify customs for completing their clearance formalities. This will enable goods to be released immediately on arrival. The customs warehouse framework will be transformed into a warehouse operator-centric system with a self-declarations, electronic tracking, and risk-based audit. These reforms will move away from the current system of officer-dependent approvals and reduce transaction delays and compliance costs. Ease of doing business. Approvals required for cargo clearance from various government agencies will be seamlessly processed through a single and interconnected digital window by the end of the financial year. Processes involved in clearance of food, drugs, plant, and animal and wildlife products, accounting for about 70% of interdicted cargo, will be operationalized on this system by April 2026 itself. For goods not having any compliance requirement, clearance will be done by customs immediately after online registration is completed by the importer, subject to the payment of duty. Customs integrated system will be rolled out in 2 years as a single integrated and scalable platform for all customs processes. Utilization of non-intrusive scanning with advanced imaging and AI technology for risk assessment will be expanded in a phased manner with the objective to scan every container across all the major ports. New export opportunities to support Indian fishermen to fully harness the economic value of marine resources beyond our territorial waters. The following measures will be taken. A. Fish catch by an Indian fishing vessel in exclusive economic zone or on the high seas will be made free of duty. Landing of such fish on foreign port will be treated as export of goods. Safeguards will be put in place to prevent misuse during fish catch, transit, or transshipment. to support aspirations of India's small businesses, artisans, and startups to access global markets through e-commerce, I am pleased to announce complete removal of the current value cap of 10 lakh rupees per consignment on courier exports. In addition, handling of rejected and returned consignments will be improved with effective use of technology for identifying such consignments. I propose to revise provisions governing baggage clearance during international travel to address genuine concerns of passengers. The revised rules will enhance duty-free allowances in line with the present-day travel realities and provide clarity in temporary carriage of goods brought in or taken out. There are honest taxpayers who are willing to settle disputes by paying all their dues, but they get deterred due to negative connotation associated with penalty. They will now be able to close cases by paying an additional amount in lieu of penalty. Honorable Speaker, sir, with this, I commend the budget to this august House. Jai Hind. 1.5 hours.
आइटम नंबर 3 माननीय वित्त मंत्री जी.
Item number 2, sir.
3.
Sir, with your permission, I rise to lay on the table of the following statements under Section 3, 1 of the Fiscal Responsibility and Budget Management Act of 2003. Medium-term fiscal policy, fiscal policy strategy statement, and macroeconomic framework statement.
Item number 4, माननीय वित्त मंत्री जी.
Sir, with your permission, I move for leave to introduce the Finance Bill 2026.
प्रश्न ये कि विधेयक को पुनर्स्थापित करने की अनुमति प्रदान की जाए. जो सदस्य इस पक्ष में हाँ गए, जो सदस्य विरोध में ना गए, मेरे विचार में निर्णय हाँ वालों के पक्ष में हाँ वालों के पक्ष में अनुमति प्रदान की जाती है. माननीय मंत्री जी, अब विधेयक पुनर्स्थापित करें.
Sir, I introduce the bill.
माननीय सदस्यगण, आपको सूचित किया जाता है कि माननीय वित्त मंत्री जी के बजट भाषण की कॉपी पब्लिकेशन काउंटर पर ली जाती है. बजट भाषण और बजट से संबंधित दस्तावेज आपके मोबाइल फोन और मेंबर पोर्टल्स पर ही उपलब्ध है. सभा की कार्रवाई कल सोमवार दिनांक 2 फरवरी 2026 को प्राप्त 11 बजे तक के लिए स्थगित की जाती है.
All right, there you have it. The Finance Minister presenting her 9th budget speech in Parliament. And there have been a lot of key takeaways, but the Finance Minister started off by saying that all of these proposals are enhanced in order to boost growth, meet people's aspirations, and enable inclusive developments. A lot announced when it comes to manufacturing, etc., that I'm going to come to, but here are some of the top key takeaways that you need to take note of. The FY27 capex is pegged at 12.2 lakh crores versus 11.21 lakh crores. You also have the FY27 total expenditure, which is seen at 53.5 lakh crores, and the fiscal deficit for FY26, that is pegged at 4.4% of the GDP. The FY27 fiscal deficit pegged at 4.3% of GDP. Gross market borrowings stand at 17.28 lakh crores. The net market borrowings are 11.7 lakh crores. Another big one, and this came as a huge setback, the STT on futures has been raised to 0.05% from the 0.02%. You saw an immediate reaction on stocks like BSE, MCX. And they're going to tax buybacks for all shareholders as capital gains. That was another big announcement that was doled out. In addition to that, some of the other big announcements include the 40,000 crore outlay to boost the manufacturing and electronic components sector, the announcement for 5 medical tourism hubs that led to a sharp rally in a lot of the hospital stocks as well, and mega textile parks that will be announced, as well as capex, which is up about 9%, as we said, at 12.2 lakh crores. All right, time to decode the budget. We have our experts standing by. First up in the studio, Aashish Shankar, Head of Investment Advisory at Motilal Oswal. Ashish, you've taken in the 1.5 hours of what the Finance Minister had to say. And what has been your overall assessment? First, let's start. What's the rating on 10?
So, look, I would give it a rating of at least 7 on 10.
7 on 10?
Yeah,
okay.
Absolutely.
What stood out?
See, I think this has to be viewed more as a policy document. And that's the cue the FM has given us. See, there are three big areas where we needed intervention from the government. One is infrastructure. And if you actually see the budget, and I don't know how much of the time that the FM has given to infrastructure, but I guess it'll be quite a bit of bandwidth that she's dedicated to infrastructure. On the logistics part, on the freight part, a lot of announcements have been made. Second is the entire, trying to write the AI story, right? So big announcements on the data center front.
Yes.
Right? So that's another infrastructure announcement. The third is, how do we get excellence in manufacturing? And in fact, you had this queue in the economic survey. If you remember the economic survey, which was released a couple of days back, I think it had clearly mentioned that unless our goods exports go up, there is no way we can bridge our balance of payments. So a lot of announcements on electronic manufacturing. So I think overall, it was a good budget for the industry. And one has to view it as a chain of policies that the government is making. Of course, whenever you kind of come to the budget, there are expectations around taxation. But I genuinely believe that they'd already laid the personal tax framework last year, right?
Okay.
They'd made a lot of announcements.
Not done much on that front.
Right. And a bit disappointing was the hike on the STT.
Putting it mildly.
Yeah, but I think, we should have got the cue before the budget itself. The government is trying to discourage retail investors with smaller savings from going into F&O trading. And I think there was a lot of announcements on the, ease of filing tax returns as well. Around dispute,
dates being extended, tax holidays, etc. Yeah.
Correct. So overall, I think I view it as more like a policy document with less on taxation. And in any case, the budgets, a lot of the things are outside the budget, right? Your entire indirect tax is outside the budget. Even personal taxation, to a large extent, they've announced whatever frameworks they wanted to announce till last year.
Okay.
So it's more like a policy, where the government wants to put their capital, where they want to focus upon. Another heartening aspect of the budget was the fiscal deficit, the adherence to the fiscal deficit direction.
Yeah.
Right, which should hopefully be positive for bond markets and should keep interest rates low.
Okay, now I just want to walk you through, we don't have the live market rates, but here's how the market is reacting. 2.5% down on the Nifty 50 at 24,708. So it's all, inching towards below that 24,600 mark. You've got the Sensex as well, which has come down quite significantly. We're down 1,600 odd points on the Sensex. The Nifty Bank as well is down about 1,200 odd points as we speak at 58,400 levels. And of course, a lot of those stocks related to the STT raise, those are the ones that are really taking it in the chin. And I want to come to that specifically. I know you did speak about discouraging small investors, but how do you see it from a stock market standpoint as well, and the kind of reaction or knee-jerk reaction that we're seeing to some of these stocks? And how are you looking at the taxing buyback for capital gains for all shareholders? What do you make of that?
So I think it's an immediate negative. For capital market players, especially surprising considering that we have a big capital market listing around the corner. So that was a bit disappointing. So at least for the next 12 months or 18 months, the earnings will be under pressure for capital market players. However, from a structural longer term story point of view, nothing changes. It's just that the mix in terms of revenues for brokers will change. So in the near term negative, but medium to longer term, I think that story is unchanged. I think the buyback capital gains taxation just brings in clarity There was a little bit of grey area. Earlier they taxed it like dividends. So now I think they've cleared it up. It's capital gains for everybody.
You know, we're getting a lot of comments, and once again, thank you to everyone who has logged in on the YouTube Motilal Oswal page and for tuning into the budget analysis with us. In a short while from now, we'll have some of the tax experts as well to decode this. But I think everyone's immediate reaction is market ko dekho, market gir raha hai, kya ho raha hai. And no real mention about defense, which was something that the market was really looking forward to. It was a slight, and railways. Do you think more was expected rather on that front?
I thought railways, they did announce a few freight corridors.
Yes.
Especially in east and south.
They did.
But
do you think more was expected on that front? Just asking.
See, government is constrained. If you look at the capex budget, right, it's gone up barely 12%. So I think there was more weightage given to fiscal prudence. I think the way the government looks at it, and again I'm linking it to the economic survey because both these documents are linked to each other. Even in the economic survey, what they've indicated is by being fiscally prudent, they're trying to bring down the cost of capital for industry as a whole in the economy. So I think it was more of a continuation. But what was heartening was a lot of the announcements around the industry, the manufacturing, you know, the cloud data centers. Lot of announcements around tourism as an industry. So I think it's a mixed bag. I agree. Capital markets always goes in with a lot of expectations around the budget, but one has to see it as a continuation of the government policies.
Okay, continuation of the government policies. There have been a few positives, but there have been quite a few negatives, especially on the tax front. And let's decode that. Ketan Dalal, Managing Director at Catalyst Advisors and XPWC, joins in. We also have Parizad Sirwalla. She's partner with KPMG's India Tax Practice. Thank you both so very much for taking time out. And I think the markets are seeing a huge knee-jerk reaction to the big announcements that have come in on tax. And Ketan, Mr. Dalal, I would just like to get in your first take. STT on futures being raised to 0.05% versus 0.02%. What have you made of that? And have there been any other announcements within the tax framework that have stood out? And I'm sorry I'm piling on questions, but how would you rate the budget purely from a tax standpoint on 10? I'm afraid you're on mute, Mr. Dalal.
Yeah. No, I realize that. Okay. No, as the previous guest said, you know, the STT rate increase, I think is intended to disincentivize futures and options. But the problem is that what is not done, Avan, is more important also than what is done. In the sense that we were expecting a lot more. So, for example, you know, capital gains, you know, the rate of tax for individuals is very high and at a very low threshold. Something on housing, you know, none of that has come. Of course, there are things that have come on transfer pricing, you know, safe harbor, etc. But if you look at it from a larger macro standpoint, it stands out not for what is done, but I think for what is not done. One of the worries that was there anyway is that this so-called New Income Tax Act 25 could be sort of the reason why for the government to say, look, we have just come out with a new act. But actually that is not correct because this so-called new act is primarily a renumbering and simplification of language. And a lot of changes which are substantive changes which should have been done or structural changes that should have been done have not been done. So this is in a sense quite disappointing, to be very honest. I'm not sure too many other things stand out. There are some fine prints on the buyback tax, etc. But I think from a capital markets and general business perspective, I don't think it will move the needle. And in fact, to me, it looks more negative than positive, frankly.
Thank you for being candid with us. It won't move the needle much. You're saying that the new Income Tax Act was basically a simplification of language. Parizad, would you concur with this? Has it been more of a disappointment on this front, just a little bit of tinkering versus any major structural changes? And what's your rating on 10?
So more than a rating, Avan, I would say that, you know, it was somewhat expected. You know, I would somewhat, you know, to what Aashish also said, that if you know, over the last 2 years, actually a lot of tinkering and overhaul has already been done if you see on both the personal tax regime and the corporate tax regime. So actually, in line with the stated objectives of the government, which is more on, ease of compliance, transparency, even, when she started the speech, sustained growth, stability, fiscal discipline, reform over rhetoric, and people over populist. So from that perspective, if I see, along with, the headroom available for fiscal discipline as well, and of course, one has to read the fine print, but at least there are some, steps taken from an ease of compliance perspective for small and individual taxpayers or overall. As an example, some of the timelines for returns have been rightly extended to 31st March because it was a huge challenge for individuals to file the returns. Then I was just listening in, the TCS rates have been rationalized or dropped. That should alleviate the cash flow issues which some of us were practically having, particularly, when you have parents, for children studying abroad towards education and medical expenses as well. And I also observed a lot of, the entire sort of amnesty schemes for certain, young professionals, as she mentioned in her scheme. If you genuinely forget to disclose your foreign assets or income in line with the nudge campaign that the government has been running, there seems to be certain thresholds provided there, but some immunities from penalty and prosecution in line with the black money law as well, which I thought would be a welcome move, but of course, subject to reading the fine print. There is also an integration between penalty and prosecution provisions. I think the intent seems to be moved towards a trust-based approach rather than a prosecution-based approach. And of course, last but not the least, it was really expected that STT would be remaining or rationalized on non-delivery based transactions. Of course, to what the earlier guest said, that people were hoping that STT be completely done away with on all transactions because it was in an era where capital gains tax were exempt. That has not happened except for rationalizing it on non-delivery based taxation. One has to also see this change in the buyback taxation, which is, may impact taxation for startups, particularly on employee stock option related benefits. But I would like to, give my comments after reading the final. Overall, Ava, I think it is more a budget as far as I feel from a tax policy change intended to be to continue with the stability, not much draconian changes because they've already done that in the past.
Okay, intended to be with policy stability, and that is what you expected. Just going to recap the top 5 budget updates this time around quickly. The FY27 capital expenditure is set at 11.2 lakh crores over 12.2 lakh crores last year. The STT, or the security transaction tax on futures contracts, as we said, has been raised to 0.05%. The share buybacks now will be taxed as capital gains for all categories of shareholders. On the macro front, the fiscal deficit pegged at 4.3% of GDP for FY27. And now we also have the deadline, as Parizad was talking, to revise the file returns extended to March 31st, which will be seen as a positive. I'm going to come to you then, Aashish, to get in your take overall, because there have been quite a few steps as well. The outlay to boost manufacturing of electronic components, a 10,000 crore allocation as well for biopharmaceuticals. How have you looked at some of these announcements? Because I think while on the services front, we were doing fairly okay, it was on that manufacturing front where that impetus for a push was much required or awaited. Has it come about with this?
So, Avan, the intention has been very clear in this budget that they want to give SOPs to the manufacturing sector, and it has to be viewed in sequence, right? Over the last 1 year, what has happened is, this entire tariff war has changed the way the governments are looking at external policy, right? And just before the budget, if you recollect, the EU deal was announced, right? Which can give a big boost to manufacturing. So it is in continuation with these, events that the budget also decided to speak a lot about manufacturing. And clearly, goods exports in India has been lagging. If you see the last 5 years' growth on goods imports has been abysmal. It's been low single digit. Versus services, India is still a services giant, especially when it comes to IT services, right? So they needed to do something, but of course, like they said, devil is in the execution, right? You can make all the announcements that you want, but eventually how they execute it on the ground will determine how these sectors will shape up. There is no doubt in my mind that unless India makes significant strides in some of these sectors, they made a lot of announcements around biosimilars also, and encouraging India as a biologics manufacturing hub. So that was also quite positive. But again, the execution of these policies at a grassroots level is what will ultimately determine the shape that these industries take.
Okay, so the devil is in the detail, and execution will be very critical
Absolutely.
to watch for some of these big ticket announcements. I just wonder, Mr. Dalal, what your outlook is on the fact that now that tax holiday has been given till 2047 for the companies that provide cloud services to Indian companies. How are you reading into that announcement? Is it a positive?
Certainly, Avan, I think the focus seems to have been on anything to do with semiconductors, chips, artificial intelligence, and definitely this kind of tax holiday will be helpful because it brings about a level of certainty to what is otherwise a very uncertain cross-border tax regime. Having said that, the point is so much needs to be done. And, Ashish was mentioning about the boost to electronics manufacturing and a couple of other sectors where manufacturing is incentivized, and that's helpful. Having said that, I think the expected thrust on manufacturing, because it is such a critical component of job creation, one was expected to be far more broad-based. This is too siloed to my mind. So will it help? Sure, it will help. Will the transfer pricing safe harbor? See, what happens is when you have a global capacity center, you get into disputes with the tax department in terms of what the Indian center is charging to its, let's say, foreign parent. Okay, now will liberalizing that and sort of reducing the possibility of disputes there, will that help? It absolutely will help. But I think it needs to be far more broad based. I mean, as I say, of course, this is not on the manufacturing sector, this is on the service sector. So these kind of things will help, but honestly, I was honestly expecting far more. So one comment I would say is disappointed that manufacturing has not been tax incentivized. Of course, it needs many other incentives, but not tax incentivized. The second disappointment is we have seen such a huge pullout of foreign portfolio investors' money. And I was really expecting something significant happening there. So, for example, if you look at, and I'm not saying the reason they have gone away is the Tiger Global judgment, far from it. But the Tiger Global judgment was actually, if you honestly ask me, going back on a government promise. So, honestly, I was hoping that something would be done on that, but that was a hope and not an expectation. And the hope has been belied, to be honest with you.
Okay, so very categorical about your take on the budget, the fact that it has been a bit of a disappointment on that front as well. Okay, thank you for staying on with us. We're decoding what Budget 2026 means. The Finance Minister just spoke for about 1.5 hours in Parliament. Lots of tinkering has happened to individual tax brackets. We have also seen news coming in with respect to the Finance Minister focusing on capital outlay in the manufacturing, electronic components, tourism, hotel sector. And then, Ashish, another part was the Finance Minister proposed that 10,000 crore SME growth fund. And this is really going to be a big push to a lot of the MSMEs, although they've not specified the qualifying criteria for this fund. This was a major area that was also very closely being looked at. Has
Right.
enough been done?
So again, Avan, look at it in continuation with their policies over the last 3 to 5 years. What has happened is GST and a lot of the organized trade have disrupted smaller founders, right? The Indian SME, MSME, especially even after COVID, got disrupted quite a bit. So I think it's heartening to see the government has acknowledged that this sector needs a lot of support. Frankly, will 10,000 crore move the needle? To be honest, just 10,000 crores of capital will not move anything, because as you know, it takes a long time for them to actually disburse. I mean, you remember the startup fund that they started, etc., right? But it's heartening to see that they've acknowledged it and they have provided some capital to boost this sector. So I think this also means that they will implement more policies and ensure that the smaller promoters also come into the organized fold.
And a lot was seen even on that textile front with the proposal of this mega textile park, because I think the sector has really felt that pain from that US tariff of 50%, and that was really been talked about. And there was, a scheme announced, the Mahatma Gandhi Gram Swaraj initiative to strengthen handloom, handicrafts, etc. Do you think that for a sector that's really been plagued with this negative news, at least acknowledgement was a step in the right direction, or do you think this is baby steps, a lot more needs to be done?
A lot more needs to be done, but this was baby steps, and textile is a fairly labor-intensive sector. See, if you also see another underlying mood of the government is to work around employment, because there is a lot of noise around AI disrupting employment. Right?
Yes.
So how do you create large-scale employment in the country? It is only through manufacturing sectors. So whether it was electronic manufacturing, whether it was textiles, and you're right, textile sector felt the heat after the US tariffs were announced. They're hoping that this EU tariff deal will ensure that there is some relief to this sector, because EU is a massive market for textiles from India.
Yeah.
And with Bangladesh struggling, I mean, remember Bangladesh was doing more textile exports than India because they had a better tariff regime with most of these countries.
Right.
So with this EU deal, hopefully we should see some revival in the textile sector. So whether it's tourism, whether it is textiles, whether it is electronic manufacturing, if you see the other underlying mood of the government is to try and see how to encourage employment across the economy.
Okay. Ketan, Mr. Dalal, just wanted to get in your take overall. The fact that we have seen some negative announcements come in, but then we have seen them moot the ITR 1 and 2 deadline to July 31st, the reduction of the TCS to about 2%. The NRIs and POIs as well can invest in India. Some of those announcements as well have been made. How would you weigh the positives of the tax announcements versus some of the negatives that have been made?
So, Avan, as I said, whether the TCS will help, Parizad mentioned about the simplification, you have these revised returns. Will it help? It does help. But what is required, it's like saying, let me put it, I don't know how to put it, but let me try this. It's like saying what has been done is a deep cleaning. What was required was at least a renovation, if not a redevelopment of a building. You know what I'm saying? So, all this will help. But in a situation where you have such a massive global overhang in terms of geopolitics, you had the rupee going from 86 to 92 in a period of 6 months. When you had FII pull out so much money, when you have the India-US trade deal hanging in the air, I think you require significantly more boost. And what it's like a bazooka boost which is required. I mean, firing some pistols, will it help? Yeah, it will help. But really, you require, to be very honest with you, I'm sorry to say this, a real bazooka boost. And unfortunately, very unfortunately, I'm not able to see that bazooka boost.
Okay, you expected that, and that has not come about in the budget. You're saying that the negatives have outweighed the positives, at least on the tax front. Mr. Dalal.
Sorry.
No, go ahead.
I don't want to say that, Avan, sorry. What I mean to say is, it's not that negatives and positives. I think there is not much which has come.
Okay.
This absence, the absence is what is worrying me.
I'm sorry for misrepresenting what you said.
That's fine.
But you expected more, and you feel that not too much has come about, at least on that front. Mr. Dalal, always a pleasure to interact with you. Thank you so very much for decoding what exactly this means for our individual viewers. And Aashish, sort of just coming right back to that, I wanted to understand just from an income tax perspective, for someone who's watching, if they don't really get the intricacies or too much about the tax slabs, simplify it. How is life changing today for an individual taxpayer with different tax brackets? If you could, I know that that's not your forte, but just how is life changing for them?
No, actually, Avan, there's not much
Nothing
changing
has
this
changed.
time around. I mean,
Nothing
last
has
time they made quite a few changes. I think the nudge is for people to move to the new tax regime.
Okay.
Right? And they have made, they're basically nudging people to disclose income in case they've not disclosed.
Okay.
Whether it's foreign income or whether it's revising their tax returns. So they're just making it a little easier for people to disclose. Right?
Okay.
So compliance is what they're pushing for in this budget. But life doesn't change much for the larger population from a direct taxation point of view.
I'm very glad that you clarify that, because I'm sure there's not many people maybe who are tracking the fine print and they just want to know, Feb 1st ke baad, how does my life change? And like you said, it's more from a compliance.
But of course, you'll have to see the fine print. Many a times in the past few years, so there are some provisions which come in the fine print.
Okay.
So once we go through the budget document, we can be sure that there's no change.
Hopefully no negative surprises either coming in.
Correct.
Okay, stay on with us. Let's also connect with Sudhir Kaushik. He is the co-founder and CEO at taxspanner.com. Sudhir, good to have you on board. We were just discussing the overall tax implications, three very different views. One says we weren't expecting too much, so what came in was pretty much unexpected lines. The next is talking about how this life is not really going to change for individual taxpayers. This is just a nudge for more compliance and, to disclose taxes. And if you can hear me, Sudhir, the third opinion was that I expected bazookas, but I didn't get much. What is your assessment on the tax front of the budget?
Thank you for inviting me on this budget. Actually, today is not a kind of a budget we have been expecting earlier. People generally expect a tax slab change. But this year, they have changed in the compliance. They have given the relief to the taxpayers in terms of doing the compliance also. So tax slabs have been remained same, but the relief in terms of reduction in the TCS rates for the overseas traveler, it was really high, 20% and 5%. Now it has been reduced to 2%, which is actually reasonable, and cash flow can be managed. People, those who wants to travel abroad, they can manage this cash flow. The second thing is the education TCS. That has also been reduced from 5% to 2%, which is again a kind of a remedial step by the department and the finance minister. The other thing is a financial disclosure of foreign assets or income. This is only 6 months window. And we have been observing from the employees, those who have got ESOPs or those who have worked abroad, especially they have been ignorant despite of so many notices by the department and so many reminders from our team also, but they are not reporting 100%. 100% means they sometimes think this is a small income or a small asset, need not to be declared. Every asset, even a bank account or a shareholding, anything you own outside, even if you have come back to India, that asset, that income has to be declared. So there is a simplified scheme for 6 months, and that 6 months starts from now. It's not, it will start from April or something. This 6 months window is starting now. So you have to pay 30% tax on the undisclosed asset or undisclosed income. So this is something I would say, again, giving a good opportunity for the people, those who say, I was not aware or ignorant. So now they can't say like this in future, and they will be penalized heavily for not declaring foreign assets or income. That's the department. Even if in last few months they have been sending notices to the taxpayers for the same. So this activity, I think the government is looking for all the foreign assets and income declaration. That's what clearly mentioned, and last window has been given.
Absolutely. Like you say, now no excuses. It will be time to pull up your socks. I'm just going to recap for those viewers who have just joined in. Firstly, a huge thank you. Thank you for being with us on the Motilal Oswal YouTube channel. Here are the taxation related updates in Budget 2026 that you need to be aware of, the top 5. First, the Securities Transaction Tax, or STT, on futures contracts has been raised to 0.05% to 0.02%. As our expert says, this was a move to discourage a lot of small investors from dabbling in the markets. Share buybacks now being taxed as capital gains for all category of shareholders. This has come in as a negative. There has been a deadline to file the returns that has been extended. So your revised returns deadline has been extended to March 31st, but this is going to be with a small fee included. The TCS rate on outward remittances under LRS for overseas tours, medical and educational purposes, that has been slashed to 2%. And as we've just spoken about, this 6-month foreign asset disclosure scheme that is going to be open for small taxpayers like students, employees, as well as NRIs. Sudhir, if I could also get in your take, because there has been another proposal which we've discussed, allowing people, the PROIs, the residents outside of India, to invest in equity instruments of Indian listed companies via the portfolio investment scheme. That was the investment limit for an individual was proposed to be raised from 5 to 10%. The overall cap proposed to be raised to 10 to 24%. What has been your take?
The Indian economy is doing good so far, and hence the market is also going to be delivering good results. So why not give that opportunity to the people, those who belong to India and they want to participate in the growth of India? So if at times the global money gives some kind of a jitters to the market, these people, those who have emotional attachment to the country also, they should be benefited with this kind of a remedy for from the government. Why we should restrict them to 5% or something less? So the government has given the right direction.
Okay.
They have
Can I thank both? Wait. All right. Thank you very much for giving us that clarity, Sudhir. Always a pleasure interacting with you. Thank you so much for joining in. And Aashish, thank you so much for decoding a lot of the incentives that have been announced in the budget and the proposal, as well as from the income tax front. Great to have you as well.
Thanks, Avan.
Thank you. All right, as we promised, we've got a plethora of experts and we are decoding Budget 2026. So let's connect then with Mr. Ramdeo Agrawal, who is now joining us. He's the founder of Motilal Oswal's, the chairman rather of Motilal Oswal Group. Thank you so much for taking time out. Mr. Agrawal, I think that we were going, we will be having him with us right here live. And I just want to recap some of the important announcements that have been made, because the fiscal deficit target for FY27, that is pegged at 4.7% of the GDP. This estimate, I think, is pretty much in line with what was previously set at 4.3 to 4.2%. Now let's connect with the man of the moment, Mr. Ramdeo Agrawal, who is right here with us in your live studio at the Motilal Oswal office. Could it get more convenient for you? Just had to walk up?
Amazing. I mean, I just didn't know that you are doing this out here.
Okay.
So it feels like as if yet another channel, but
it
I
is,
think
and
will be
this
different.
Is your own channel
no,
now.
No, yeah,
so
but it will be very different. I mean, I will evolve as we go forward. We are not going to do what they are doing. We don't want to give competition to them.
Oh, yeah.
We want to only help.
Create a new category.
Completely new category.
Okay, great. Good to know that. And thank you to everyone who has tuned in.
Yeah.
So, Mr. Agrawal, we said we're going into the budget not expecting big bang reforms, but we want policy continuity because it is a very volatile geopolitical environment.
Yeah.
Is that what we got?
Yeah. I mean, but because we are in stock market, budget for first 1.5 hours, or it was very cool, like nothing, no ripples, nothing. And then suddenly this capital market thing started and their buyback, first it started with a buyback, so but taxation on buyback. That is, I think, they have given good relief to the minority shareholders in the sense that if their marginal tax rate is higher than 15%, they obviously get benefit of paying at 12.5% if it's long term. Typically, it is long term. So if your tax rate is 20%, in that case, right now it is being treated as dividend, and hence you pay 20%. But now it will be treated as capital gains tax, so it will be taxed at 12.5%. So to that extent, it's a small relief to the minority shareholders. But promoters, they end up paying still 30% plus. So particularly non-incorporated promoters like me, if I buy back, I don't get any benefit. So so to that extent, it's not much of a relief. It's just the thing. But I think increase in the STT from in futures from 22 basis point to 5, and on options from 1 basis point to 1.5. I think that's significant. It will have impact, deep impact in the way markets have developed in the last 5-6 years.
Okay.
I think it is all started with the options being called off from daily expiry to monthly expiry, and some of the contracts were kind of withdrawn from the option writing. So I think that measure which SEBI started doing, that excessive speculation in the market, that should be controlled. I mean, we had gone to as high as $8-9 trillion of daily option, this thing. So in that, they withdrew a lot of contracts. Now, this is far more severe, I would say.
This
that
STT move.
STT. So that makes a lot of marginal trade unviable.
Yeah.
So the markets will withdraw a lot of liquidity, liquidity which is deployed because of the arbitrage, I mean low-cost arbitrage, that will be withdrawn. That's what we are getting the initial reaction.
Okay.
And that will have impact on the even valuations of the market. What happens is that when leverage money is into the market, the prices, say something is at 20p or the moment it is allowed in F&O, the 20p goes to 23, 24p. So the moment you remove the leverage or reduce the leverage, so the stocks which are lying at a marginal yield, that has to be surrendered in the market, and that will have a slightly negative impact for a day or two till market gets used to the new rate of STT. So I would say right now demand supply is in favor of, there will be negative impact in the market because of this for some time, but once market gets used to it, then other fundamental factors will take over.
Speaking of markets getting used to it, like you said, things were calm and cool at the start, then the STT sort of surprise came in and the markets reacted very negatively. But now we have recovered somewhat. Now we're down only about, I say only because the cuts were far deeper, 200 points on the Nifty, and for the Sensex about 560 points down. We still have those individual stocks that are feeling the heat, but they have recovered, albeit somewhat.
But one point, today it is Sunday. So all
and
the
we don't have
institutions
global
are closed.
markets also.
Global markets are not there, and global investors are not operating. FIs. They are the big guys in F&O. So
it's a light market.
So we have to see tomorrow morning how they react to this. So the real action of budget will be visible tomorrow.
Should we set up again tomorrow?
Yes, we can. But more importantly, so we have to be very careful what happens tomorrow, because once they decide what trade they want to do, and I think when it is applicable, that is also important.
We'll have to read the fine print as well. But there was so much talk, prior to the budget, that defense expenditure has to be boosted. This is a big area we're watching out for. 5.9 lakh crores versus 5.6 lakh crores. Is this enough?
I mean, total capital expenditure itself is quite muted at 11.5, so I think 12.25 or something like that.
Yes.
So that barely takes care of the inflation. So basically, it's a static kind of a situation. But I think the real impact is not going to come from fiscal. Now, my sense is the real action is going to be in monetary. So one has to watch the RBI's policy making in next 1 week or 2 weeks. When is the next policy meet? So I think the whole action shifts from fiscal to monetary in terms of action, because there is nothing much in this. There are a lot of proposals. There is a lot of, like, data centers have been made tax-free for next 20 years. So actually the boom in IT software happened between 95 to 2010 because of there was a program where for first 10 years the taxation was zero. So that zero taxation situation was one of the instrumental thing for bringing up the IT sector in India. I think now data center looks to be another big one. And if actually data centers start coming in here, so data center companies themselves will do very well. But for data centers, what you need is amazing amount of power. It's a basically power guzzler. So it could have an indirect impact on everything to do with the power sector. So it can have a far-reaching effect, a ripple effect because of this. This looks to be pretty big. I mean,
the
very
data
big
center move.
Data center move because AI is a rage all over the world, and there is an acute shortage of power in various parts of the world. And hence, if by chance, if India starts becoming data center capital of the world, then you need a lot of power, and hence all the power companies supplying all kinds of plumbing within power sector, that could be indirect beneficiary, provided that data center thing picks up.
Oh, that is a great point, that this is going to really have a connecting effect. Now let's, Mr. Agrawal, you really have been tracking the markets for years, and let's just talk about the backdrop and what we've been faced with. FIIs have been pulling out hard and fast. Commodities like gold and silver, precious metals have been rallying. The bull run has been very intact. Our markets have done precious little. The most blue chip of blue chip stocks as well over the past many years have moved very limited. Looking at the markets in the light of the fact that we have Trump's tariff announcements, the new Fed chief, what is one supposed to do right now, and which are the top sectors to bet on?
Yeah, so I think still the banking finance looks to be still pretty much intact. See, basically, we did very well between 2020 to 2024.
Okay.
So on the back of re-rating and earnings growth. Earnings also grew at about 20-25%, and there was a market which was re-rating all the stocks like crazy.
Yeah.
So that was one phase which got over, and now this is a phase when there is a consolidation is on. Earnings are not earnings are growing at about 7-8% last 1 year. It is likely to accelerate in this Q3 also to more like 10-12%. And by Q4, I would think we should be in a much more stronger situation.
Okay.
So if that process continues, because see, inflation is very low. Let's see, just because budget is there it doesn't mean that market works only because of budget. Market is 360-degree. So in that, the inflation, which is low, that gives ammunition for monetary policy to be very aggressive. So
will it now?
I would think that I'm hearing something about, because today Mr. Shetty from SBI, he has said that there should be parity between the taxation of equity products and taxation of debt.
Okay.
So, and it has made a headline. So clearly, and there is nothing in the budget.
Okay.
It means the pressure on the banks to mobilize deposits is very high. So what do you do? If you decide not to put the money in the bank but put in SIP, then it is for the regulator or RBI to slash probably the SLR, CRR and those kind of things. So I think there are a lot of tools in their hand. And so monetary will, I think there is a lot of headroom there, and they have all the tools on this earth to do things. So I think budget is done, except for hammering what you call exchanges, where volumes will be impacted and hence the profits.
And the real action will be tomorrow, like you said.
Yes.
Okay, now we've got a lot of questions.
Yes,
a lot of viewers who are tuned in on the Motilal Oswal YouTube channel. So big thank you. And they have questions to ask. I asked you this, but you ignored me. Mr. Agrawal, what are the top sectors to watch out for? Now you've seen what we've been faced with. Give me top 5.
See, just because this you have seen budget for 1 hour, it is very difficult to say what is the sector, which is good or bad. Nothing changes because of this, but definitely I would look at sector which is around data centers. All the things related to data centers, now it will fly. So whether they supply cables, whether they make construction, whether they do the system, anything linked to that. This is a new boom area now. The software, GCC, and now data center. So data will become data center capital because we have a large power capability, and we have low cost of power, low cost of infrastructure, low cost of people.
Okay, so that's one, data center.
So that now, because of budget, this is the only sector which emerges. It's a new sector.
Okay.
Now you have to figure out who are the
what
guys.
about the OG banking, BFSI, etc.?
Of course, they continue. See,
which is number 2?
Banking will do very well.
Banking is number 2?
Banking will continue. Banking is good. Capital market will take a bit of hit because of the brokers particularly. They will get a little bit of hit. And so I would think capital market will be a little softer because everything will be on a slow land for next 4 quarters. Next year it will come back.
Next 4 quarters?
Next 4 quarters. Because anything you do right now, it is bad for 4 quarters or good for 4 quarters, either way. So what daily transaction they withdrew last year in November, of that full impact is now. So like that, what you do now will be felt for most 4 quarters. So capital market stocks typically would be in a slow land.
Okay. So are those your 3 sectors?
Which one?
You're saying data center, banking, and is it capital market related?
No, capital market is
part of banking.
No. So I would say financials, like lenders, all the banks and all.
Any others? Consumption?
Auto will be very good.
Okay. Any others you want to add? People will love it.
I'm not. I'm not good at it, but slightly.
Okay. Okay, Mr. Agrawal, I have so many questions for you. Now, everyone is saying that, abhi dekho market ka reaction kya hua hai. Markets have fallen, done nothing. Should they be worried? Everyone is very worried right now. What are you telling that worried investor to do? That mera paisa ka kya hoga? So what do you want to tell them?
Yeah, so they have to have patience. Right now, this is definitely 1 or 2 days will be a little challenging in the market. That's my sense.
Only 1 or 2 days?
I mean, once tomorrow FIs, they show their hands, then I think we'll see how bad is going to be the damage. 1 or 2 days means maybe a week or 10 days or 15 days.
But short term.
See, but a lot of things happen, no? See what happened globally.
But that's why they're worried.
The agreements can happen, the RBI policies can. So what I'm saying is tomorrow is one day when we have to watch when FIs and institutions, they participate. They, some of the guys can buy also. And we also have to read the budget through the lines. I mean, whatever we have heard in the speech, that we are talking about, major features. So I would think that you have to have patience. Don't expect in the short run big rally in the market. And I would, my return expectation for next 12 months will be low. But 5 years still, I would think it will be a doubler from here.
5 years, Indian market is a doubler. So what does this mean for FIIs in particular? I know I asked you that, but I'm only going to ask you again. That in backdrop of what we've seen and this exodus of FIIs, is it going to be earnings growth? Is it going to be policy announcements? Will it be ease of doing business? Will it be becoming more attractive compared to the other markets? What will bring them back?
Earnings growth. One single point.
And that is after 4 quarters?
No. Earnings growth can be this quarter. See, already earnings growth progression is better. Q3 is better. What we are seeing the results are because of GST2. But full impact of GST2 and credit flow, you know, RBI reforms and credit flow will be visible in Q4. So as quarter after quarter, you will start seeing that credit flow, credit growth was about 10% till say November or so. Now it is 14.5%, 13, 14% in January. So that additional, what do you call it? This is like a fuel to the economy. Much bigger than budgets. See, when you grow credit by 5%, you are releasing 10 lakh crores into the system, and that in a very short span. And that is, so that's almost like a 2-3% of GDP. So what it does, one has to understand, but it's positive. That's much bigger than any of the budgetary proposals. So, so while this is somewhat negative, that part is very positive. So how the corporate earnings will build up in Q3 and Q4, that we need to see. And I'm optimistic on that.
And that is what will bring the FIIs back?
Yes, I mean, FIIs, domestic, everybody will come because of that.
People are asking me for you to give 5 stock recommendations. That I'm not
neither
going
I'm
to do.
allowed, you don't even ask.
Now, you know, this drawdown in metal stocks, I think that's got everyone unnerved today. When the markets open, Vedanta, Hindustan Copper, Hindalco, double-digit drop. In light of what is happening with gold and silver, you know, we were talking to Mr. Madhusudan Kela earlier, and he said that wealth is not created by chasing. It is created by being patient and waiting. And what we're seeing right now is a FOMO effect, or it's just too volatile.
It's not too much of speculation.
Too much of speculation. You can't. You'll burn your fingers. What are you saying? What should we do with gold, silver right now?
First thing is, I'm the worst guy to be telling anything on gold, silver. Ask Kishore Narine and all. Those commodity experts, they'll give some intelligent view.
He's coming, I'll ask him, but we want to know from you
gold, silver,
also.
keep it only for him.
No, but tell us.
I'll tell you one thing. See, in any commodity, the price is determined by the marginal cost of production. Okay. Now, marginal cost of production of gold is about $1,500. The price even now is, I think, $4,900. So what is the price? About something like that.
Somewhere around
last thing it was
but
about
silver
$4,800.
is 3 lakh.
So they are way above the marginal cost of production, which is very unsustainable level. So be very careful. Either the cost of production has to go from 1,200 to, are you getting what I'm saying? If my cost of production is $1,500, I mean, okay, for scarcity you can keep it at $2,000, but you can't keep it at $5,000. The whole world will be busy only manufacturing gold and silver. So the supply will come. And what happens is, at those prices, the withdrawal of the jewelry also happens. See, a lot of gold and silver, I would think 50-60% of the gold must be consumed for jewelry. Okay, now nobody wants to buy jewelry at that price. So then One is that supply is coming, and second, the demand is withdrawn. So there will be sinking. But there was a speculation where ETFs and all were buying.
But are you buying gold ETFs right now? Are you advising buying that?
See, as I said, you ask Kishore, not me. See, you got to ask the guys who are expert on that.
Okay.
In my view, at $5,000 per ounce.
Are you buying metal stocks?
No, I'm not buying anything because I missed it.
Okay.
I was wrong in my anticipation of what can happen to the commodities, but there is a global wild rally in terms of unprecedented rally in the gold and silver. And gold happened, then silver happened. Silver happened, then copper, and then zinc happened. So it's all triggered one by one. There's some correlation in the global markets about each and every this thing. But I think fundamentally the marginal cost of production is not more than $1,500 for 3-4 kilometer down mines.
Got it. Okay.
I mean, from hell you can produce at $1,500. So there is no reason to sustain this level of price for a very long time.
Okay. Fair enough. What are you doing with consumption-related stocks or that sector? Because it's very contingent on earnings growth. It's very contingent on rural market recovery, policy announcements.
You saw the Nestle result? They were so good. You know, so now first time they're saying they're coming back. They're coming back, you know.
Okay, so what are you doing with consumption?
No. So I think...
what are you advising?
Yeah, so one is that durable consumption, non-durable consumption. So durable consumption like auto, I told you it's my favorite sector.
Auto.
Okay. Now there is some percolation into the non-durable consumption also. That is your Nestle's. If you see Nestle, Marico, I saw 3-4 results which were better than the analyst expectation. So my sense is that consumption is fine. Because of low inflation, the purchasing power buildup is very good, and hence durable demand is good, and even non-durable demand should be better. And that too coming after so many years. So my sense is that consumption per se will get good lift.
Okay. I want to ask you a question on what your outlook is on this divestment target, a huge divestment target, 80,000 crores.
Only 80,000 crores. It's not much.
Okay. Will public capex now translate into private capex from here on? How are you looking at this?
It all depends on demand. So I think if there is no demand in the economy, do whatever private capex will not come.
So you're not impressed by the 80,000 crore divestment target now?
But that will go to the public sector capex or whatever to build, to take care of the budgetary finances.
Okay.
But private capex boom will come. Say like now, the data center, that will see a massive capex boom.
Okay.
And the global money will come. All the REIT firms and everybody will come and dump here. Now there should be a good policy support. When these guys they come. Odisha, Chhattisgarh, all these backward states, they have surplus power, surplus land, cheap labor. I think those guys should welcome this opportunity to open with both the arms and welcome all the guys from US and Europe and all over. So, so that could, kind of throw some opportunities.
Okay. Mr. Agrawal, people have really been disoriented with all the headlines. Like you said, there were very positive ones, but there have been many negative ones. Now we're just getting accustomed to this. From a long-term 5-year lens, what is your outlook? What do you want to tell people about the India story, about the India macros? Where do we stand?
Yeah. No, India macro is very good. We are growing at anywhere between 7 to 7.5%. I think I have not seen the number, what is the projections. But I think 7% plus. I think what is the expected growth?
7.3, I think, I'm not sure.
Yeah, 7.3 or something like that. Yeah. So that we need to see. And what is the nominal GDP growth rate? So we'll see the numbers. It should be about 10% or so, 10.5%.
So you're optimistic on that?
Yeah, so I think it's a very, I would say, very, there is no challenge to the...
7.4.
Yeah, so there is no challenge to the current status quo.
Okay.
And growth is happening at 7.5%, 8%.
And inflation?
And inflation is absolutely muted. So there is a good firepower to increase. And if you see the economic survey, the Mr. Nagarshana has gone about, Anand Nagarshana has said that there is India is punching at below its capability. So most likely we will get the courage and start growing instead of 7%, around 7%. We'll try to push the growth rate from 7% to 7.5% and 8%. But today, because of this market thing, everything will be clouded,
Yeah.
I mean, then the real discussion will start after tomorrow's trading. Then we'll come back to the growth and what it means for the larger picture.
Yeah.
You know.
I don't know if I asked you about defense, but the expenditure is at
more static.
5.9 lakh crores.
Yeah.
You like the sector, you've liked what's been happening here. What does one do now?
No. So that sector is good, and I think whatever number they have put, if it needs, it can further get expanded during the year. So that is not a. What is the execution level? You know, at what level these companies, whether it is BL, whether it HAL, and your Bharat Dynamic, how they are executing. That is very important.
Okay.
You know?
Okay.
So you have to focus on the company rather than the opportunity. Opportunity remains a monopolistic, large opportunity as we go forward. Country will become from 4 trillion to 8 trillion. So defense budget will go maybe 2.5x, 3x. So, and there are not going to be many more companies like this, you know. So they are monopolistic, almost monopolistic.
Oh.
So they will remain up, but you can't buy them at some crazy price, you know.
Okay.
You got to buy at reasonable price and stay on.
Okay. What's your rating of the budget on 10? And which sector looks most vulnerable that you just don't want to touch right now? First rating.
See, I'm so impacted by don't ask me the rating and all.
Okay.
Because
Because of
we
the tax.
are very closer home, no? This entire capital market is so much
Fair.
around Motilal Oswal that mind doesn't go to think anything else than this. I mean, I'm just thinking two things. One is the data center, what is the data center possibility? And second is what will be the impact tomorrow of, I'm a little bit scared how FIs will think about the markets in the short term.
You're worried about that?
I'm worried about that.
So which sector is looking vulnerable then in light of everything? One sector?
All the capital market.
Okay, that sector
Capital
is
market, all
looking-
the exchanges, all the brokerages, demat, I mean, brokerages and exchanges, they look to be a little more
Vulnerable.
challenging. Already I think they must be down, 8-10%, all of them are down. Yeah.
Okay, so just a final take then on the overall budget. Was it on expected lines? Was it just the growth story continuing? Was there anything more that was on your budget wish list?
So actually, I didn't have any expectation for the budget. So budget is absolutely on dot, not too many promises or anything like that. It looked like growth oriented. A lot of new plans are there, and a lot of wishes of a lot of people have been accommodated. But I think I was a bit disappointed on the severity of the capital market proposals. But to their credentials, they had always been onto it for last 1 year. Because when the speculation became too much, then there was a lot of concern that are we becoming a speculation capital of the world? And hence, they first withdrew the daily contracts, and now they have made the F&O a lot less attractive for the people to get in.
Yeah.
So,
But they're also disincentivizing some of the smaller traders, etc. Right?
yeah, so that's what I'm saying. So what could be the impact? That you'll come to know tomorrow or day after when people start feeling the pinch of this. So I think there is sinking feeling out there a little bit.
Sinking,
And it will take some time for it to stabilize.
Okay, now I'm getting many isharas from behind to make you wrap up. You've been so kind to take time out. So
No,
thank you
it's
for
pleasure.
coming and joining in. And next year, maybe we'll have you sitting here the whole time
Whole
of the
day, whole
budget.
day, whole
Okay,
day,
great,
whole day.
Mr.
Okay.
Agrawal. Thank you so
Nice
much for
talking to
joining
you.
in.
Thank you.
So the messaging is loud and clear. The India story looks very strong long term. As of now, STT has come as a big shock to the sector as well as a budget announcement. But the data center story looks very, very promising. We'll take a very quick break. Nilesh Shah of Envision Capital, Siddharth Pai at partner at 143 of 341 Capital, Prithviraj Kothari of Riddhi Siddhi Bullion, Rajat Rajgharia, Aashish Somaiyaa, all of the other top market experts lined up. Come right back.
जब यूनियन बजट आता है हर कोई बस एक ही काम में जुट जाता है। आंखों में उम्मीद के साथ सब करते हैं बेसब्री से इंतजार।
The Union Budget for 2026 has
स्पीच शुरू होते ही हर ट्रेडर और इन्वेस्टर स्क्रीन से चिपक कर एक ही चीज ढूंढता है, अपॉर्चुनिटी। पर इस साल कुछ अलग कीजिए। हर साल अपने बजट को कंट्री के लिए देखा, इस साल उसे खुद के लिए देखिए। करिए अपने इन्वेस्टमेंट पोर्टफोलियो का रिव्यू और जानिए अपनी ट्रू वेल्थ। समझिए कि कौन सा सेक्टर आपके पोर्टफोलियो को पुश करेगा, कौन सा रिस्क इग्नोर नहीं करना चाहिए और कौन सा एक्शन अभी लेना है। इसलिए दिस बजट सीजन गेट अ फ्री रिसर्च बैक्ड पोर्टफोलियो रिव्यू डन ओनली विद मोतीलाल ओसवाल। डाउनलोड द राइज ऐप और वॉक इनटू योर नियरेस्ट मोतीलाल ओसवाल ब्रांच टुडे।
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.
Welcome back. You're tuned into the live budget coverage where we're decoding Budget 2026 that was just declared by the Union Finance Minister Nirmala Sitharaman on February 1st, a Sunday of all days. The markets haven't taken too kindly to the budget, but now seem to be recovering. We were just in conversation with Mr. Ramdeo Agrawal, who actually said that the real impact will be felt tomorrow once we have the backing of the global markets and, more importantly, the FIIs who will now digest the budget announcements and so react. So brace yourselves because volatility is the name of the game even for the next few days. 220 points down on the Nifty at 25,097. The Sensex down 600 odd points as we speak for the broader end of the market. Far sharper cuts down between 1.5% to 2% for the mid and the small cap index respectively. Let's put the spotlight then on some announcements that have been made for the buzzing sectors like the startup ecosystem for tech and understand how we should be reading into that. I believe we have Siddharth Pai. He is the founding partner at 341 Capital now joining us. Siddharth, thank you so much for taking time out. Let's begin with some of the announcements that have been made, in particular for doubling the allocation under the ECMS to 40,000 crores in the budget. It initially started with an allocation of about 22,000 crores. How are you reading into this?
I think this is a strong attestation of the fact that the government believes manufacturing is going to be key to the growth of the Indian economy as well. I think they've actually been buoyed by the PLI schemes and the various other schemes that have come out now for iPhones and others, and they want to go throughout the entire value chain as of now. So this is fantastic for Indian consumer electronic companies as well as for manufacturing in India. And for investors who are looking to invest into hard assets, they're taking this as the government's voice of strength that Make in India is actually a key flagship scheme of the government, and the government's going to end up actually supporting this for time to come, and private capital should end up actually pouring into it as well.
Okay, so it is clearly an intent that Make in India is a flagship scheme, as you said. There was also, the fact that there's going to be the self-reliant fund, and that's going to be topped up by about 40,000 crores, really to support the MSMEs. This was a scheme that was announced about 2 years ago to infuse 50,000 crores. Do you think that this sort of sum is enough to help the growth potential and the viability for MSMEs to grow into large units?
I think that's right. We've been a nation of MSMEs for far too long. I think the government has also realized that the lack of credit and the high cost of capital has actually become a glass ceiling that prevents these companies from end up actually scaling. And I think we are seeing the government slowly pivot away from startups to end up actually emphasizing a lot more on MSMEs as well, for that matter, which is why we haven't seen too many startup-related announcements end up actually coming up also. And as the free trade agreements end up actually picking up, the MSMEs will form very, very strong parts of these global supply chains as well. And the need for them to access capital at lower costs and to end up getting equity infusions is actually going to be key. So the government has created the via media for them to end up scaling. It's providing them the capital to end up actually scaling itself. And that will end up creating a multiplier effect for others. And investors are also now looking at India not just as the land of startups or listed corporates, but the MSME sector is something that's becoming primarily important to them. As family-owned businesses transition to more professional management, we will end up actually seeing this particular scheme be tapped into very strongly, both by promoters as well as by investors.
Okay, you did touch upon the point that, yes, there has been this big pivot from startups now to MSMEs. Does that disappoint you? Would you have wanted to see more announced on startups? Would you have wanted that to be the focal point? Well, not focal point, but more focus on it versus MSMEs like we have seen in the past budget?
True. It's not a zero-sum game between startups and MSMEs. Startups represent the new age companies that end up coming up, the new age economy, which is supposed to translate to $1 trillion contribution to India's GDP by about 2032. Now, obviously, they do actually need support, and some of the low-hanging fruit, like ESOP taxation, which has been an ask for close to about 15 years, for that matter, to see the fund of fund support end up actually getting accelerated, to see a greater allocation or release of capital from the RDI fund also. The RDI fund of 1 lakh crores has been announced, but we need to end up actually seeing that level of outlay get released in the budgets as well and actually get that kind of credence. So I think the government has now moved to a tune where they speak 1 year about MSMEs, 1 year about startups. So we seem to be in the off cycle for startups. Hopefully in the next year, some of these issues can actually get taken up as well, and startups will end up seeing their moment in the sun once again.
Okay, and there was also that support for the animation, visual effects, gaming, comics sector that's going to require 2 million professionals by 2030. Tell us a little bit more about what this could potentially do for those who are aspiring to be within this sector. What does this mean?
I think this is fantastic. Ever since we saw the real money gaming ban happen, everyone's been waiting for the government to create a list of incentives for gaming as a whole. Gaming globally also, for that matter, ends up actually exceeding what the kind of eyeballs you see in professional sports as well as media. In India as well, the gaming eyeballs ends up exceeding what you end up actually seeing for Bollywood. And India has been a fantastic hub for back-end operations, for that matter, when it comes to rigging, when it comes to character creation and everything else. But for India to end up actually truly establishing itself on the global gaming landscape, we do actually need quality professionals, not just on back-end skills, but on front-end skills as well as when it comes to design and development. So the fact that it's starting off with education and then slowly scaling up onwards means that India can truly end up actually contributing this to a large extent. We've been fantastic consumers of gaming, not as much as active contributors. I think the government is intent on making sure we become more active contributors to that as well.
Okay, and you know, we also had this major push come into the data centers, and incidentally, I was talking with Mr. Ramdeo Agrawal as well, the chairman of Motilal Oswal, and he said this is going to be the big new sector to watch out for, and not just data centers, but all of the indirect, sectors that will be connected to it, such as power and so much more. So it's going to be a tax holiday till 2047 for any foreign companies that will be providing cloud services if they do so via Indian resellers. What kind of a messaging do you think this is sending out? And do you believe that data centers are really going to be the next big boom?
Data centers are actually the next big boom, because for the amount of data that gets generated on a daily basis, and for data sovereignty as well, the government has also realized that asking people to end up hosting the data centers in India won't happen without a set of active incentives. I think the government has also now become extremely clear that in the entire data highway across the world, India can actually become the central nexus point, the way we were during the days of the Silk Road, during the maritime trade, and all these other aspects also. The fact that they've given it up to 2047 in one shot, as opposed to giving it for 5 years and then extending it piecemeal, shows that the government is actually dedicated towards this itself. And for AI to truly end up picking up in India, we do need a larger amount of compute, we do need a larger amount of data centers to end up coming in. It is a crime that Indian data is actually hosted in data centers in Singapore, in the US, etc., and they're not actually hosted in data itself. India is one of the largest data generators across the world. So it's a fantastic incentive to localize data for Indian data centers to end up actually serving the global market as well, and for investors to take a long-term bet in this growing area itself. It's a fantastic, bold move that the government's actually done in this particular budget.
Okay, fair enough. A very bold move. You also had the rollout of the second phase of the India Semiconductor Mission. The government has already nearly exhausted 76,000 crores of the funding available under ISM. I just want to know what you make of this. Is there anything more that you would have liked to see in the budget being announced? And what would be your rating purely from the tech, startup, MSME space standpoint?
Yeah. I think in terms of the ISM also, 76,000 crores is actually on the lower end, for that matter. It's large for the Indian government, but then global semiconductors is actually fairly small. Mostly you've seen larger fabs like TSMC, etc., commit $20 billion just for the sake of actually setting up an entire factory. So what I would love to see from the government on the ISM part is to look at alternative semiconductor material and material sciences also, not just the 28 to 40 nanometer nodes that end up actually coming in. Some sort of research grants or funds for cutting-edge research in this area as well. I think in terms of startups, technology, and MSMEs have seen fantastic boost. We've seen overall technology and IT services end up actually doing well. Startups could have actually seen a lot more support to end up coming in. And I think the VC sector and private equity investors, the biggest boost we have as of now is the buyback tax clarity. But I think besides that, there have been some quality of life measures that have come about, but nothing that's extremely large for people to end up actually talking home about and to end up actually giving confidence to their investors and their global LPs as well.
All right, Siddharth, appreciate your time. And did you give me that rating? Did I miss it?
I think I'm going to borrow a leaf out of Mr. Ramdeo Agrawal's playbook and not actually give a rating for this. But I think for MSMEs, I would give it a 7. For startups, I would give it a 4, and investors roughly on the fence. So I'd give it about a 5.5 at max for that.
Okay, fair enough. Good to know that you've been tuned in and listening in to the conversations as well. Good to have you, Siddharth. Thank you so much for being with us.
My pleasure. Thank you.
All right, time to shift gears. Lots happening in the commodity space. Gold, silver, Prithviraj Kothari, MD at Riddhi Siddhi Bullion, now joins in. Thank you so much for taking time out. I think your sector has been one of the most hotly spoken about, with the way we've seen a huge soar up in gold and silver prices. I'm just wondering, was there anything that you expected in the government, in the budget this time around? Import duty cut, gold, silver, anything that you would have wanted to hear, and what has been your assessment?
Thank you, ma'am. We have already requested to the finance minister that it should be the custom duty, because everywhere they are signing the FTA. In FTA, it comes under many countries. They sign FTA, it means comes under 0% custom duty of items. So it's what happened. There is a loophole of the policies, no. So somebody can misuse the policies. So we requested government to at least reduce to 6%. 5% is the basic custom duty and 1% is the agriculture sales. So we propose that reduce the 2% of customs duty, and in the Dore bar we have reduced it for 0.65% to 1.65%, because there is a TRQ sign between UAE CIPA's gold in UAE. So there is basic custom duty difference between 1%. So suppose today custom duty is the 6%, there is a less 1%. If you are importing from the UAE, then the custom duty should be 5%. And Dore bar is from only the 0.65%. It means 0.35% is the fresh finished goods is cheaper. So it's affected on the refineries in all over in India. There is almost 50 to 60 NABL and BIS refineries. They are affected because if a finished product comes 1% discount, then how it's Dore refinery survive. So we requested FM to reduce 1.61% more. But unfortunately, I think they're not recognized, or maybe next budget they are helping that. But overall, there is no changes in CTT or maybe in customs, basic custom duty, and I think there nothing to do.
Okay, let's also, I request you, Mr. Kothari, to stay on with us. We also have Kishore Narne. He's ED, Head Commodities, Global Markets and NRI Business at Motilal Oswal Financial. Kishore, you know, everyone, who is anyone, has been talking about gold and silver prices because they just cannot get over this solid move that we've seen. Do you think that there was something expected in terms of the budget announcements on import duties here and that didn't come about? And what would you have wanted to see?
Yeah, I think expectations were widespread on both the sides. Actually, there was a camp which believed that duty will be increased because to protect the CAD and to discourage imports. But on the other side, again, as Kothari said, that there is some respite which was expected on the Dore side, so that to protect the domestic refineries and making them economical. So. But the market, when you look at the price itself, so we have been trading significantly premium to the landed price, which was actually telling us there could be a possible duty increase, which was discounted in the market. Again, so there is nothing, not even mention or nothing being touched on that part. So I think government is comfortable. And maybe they might be looking at as globally central banks are accumulating gold reserves and the governments are accumulating gold reserves. Government may also have taken that stand that why can't Indian families continue to accumulate gold as a strategic. So it belongs to the country anyway. The metal will come into the country and somehow could be useful in the future. There could be a strategic call on that.
You know, I actually, Kishore, was told by Mr. Ramdeo Agrawal that don't ask me about what to do with gold and silver. Ask only one person, and that is Kishore Narne. So I will do exactly that. What does one do right now when it comes to gold and silver? Those who have missed the bus, those who have the FOMO, what do they do right now? It's too risky a bet, right?
नहीं, जब तूफान में फंस जाते हैं थोड़ा वेट करना जरूरत है. So right now it's in the middle of the cyclone.
Okay.
So let the air cool down a little bit, let the sentiments cool down a little bit. So structurally, long term means at least आपको 12 months to 18 months or beyond that, gold looks absolutely rock solid. we were expecting 10-15% correction, which has been already there. Again, at the same time, silver is a volatile cousin of gold, and it's hardly 1/10 in the value terms, so it becomes slightly bit more speculative and slightly bit more agitated when it comes to price volatility. So generally 2 to 3 times price volatility can be expected in silver. So when gold falls by 10%, silver fell by 30%, 35% also. So again, if I tell you one thing, sir, somebody has entered or bought silver on December 1st, couple of months back, 2 months back exactly, today we are on February 1st, they are still in positive. They are still making money. 1,80,000 today, still 2,34,000. After all this mayhem, still a couple of months back, somebody bought silver. They are still in profit. So the last end of that froth has been out now. The weak hands will be out. So strategically and tactically, the gold is still on rock solid platform. One can keep accumulating. So what I would say is, because as the environment has to cool down, so if you have missed the bus entirely, so if you are allocating some capital to gold, make it into 4 or 6 installments and buy over next 4 to 6 months, so you'll be able to cash in on any further corrections and you'll not miss that. And if you are into silver, better avoid at this point of time. Let it settle down for the next 10-15 days and see where it settles down, and then from there we can take a call from there.
Okay, rock solid. And I want to come to you, Mr. Kothari. Why do you think that the gold prices have surged the way they have? And what does this do when it comes to consumption, when it comes to jewelry demand, given that we have seen the sharp rise as well in investment demand?
I think the market is a crash, the fell down of almost 10% in a Friday. I think everyone sitting with the long. No one seller in the market, and everyone sitting and leverage is a huge position. If you see in the ETF, you will see in the physical, you will see in the commodities market, in spot market, everyone is the huge premium is there, and huge investment demand, leverage, everyone talking about gold and silver. And what happened, everyone sitting with the long, and on one side, every buying the gold, same in the silver. And if you see the last week only, the prices move only almost every day $200 gold. If you see Monday to Tuesday to Wednesday, 200. It means what happened? Only the rollover will be happening. After closing market, the market move $100, $200. After market, after New York close, I am talking about. So they are just speculating that no one is the seller in the market. The margin is increasing. So there is a possibility of a stop loss trigger. And now suddenly the price fall 10%. If a margin is the 5%, if silver margin is a 10%, market fall 30%, then what happened? Every person have their position should be automatically wiped out or stop loss trigger. So I think this is the right time to buy the gold and silver. I think maybe next week pressure is there because of the high margin. Because of the MCX increasing there 30%, in the silver is almost 70%. To no one buyer is, I think, is coming. So I think that time to accumulate it, gold and silver, it's the right time to buy slowly. I think market will be bounced back very soon.
Okay, that's your take. Kishore, I just wanted to understand what this budget means from an NRI investment standpoint. Did today's budget make India more attractive for NRI investments?
Yeah, absolutely. I think the person of Indian origin and the overseas citizens of India, especially when I think they have been given a larger access to Indian capital markets through PIS accounts. The limits have been significantly enhanced. Earlier, when the limit was 5%, now it's been made as a 10% at an individual level, and at the overall market level, it's been increased to 24%. So that actually leads to a lot of flows. Could be possibly that's where they're trying to attract the overseas citizens' capital from that. So that's a major development, and they also recognize the fact that there has to be this kind of capital has to be attracted into the market.
Okay. I think, Kishore, we've been so focused on gold and silver. We're not talking about any of the other metals. Just an overview on what's been happening, how they're shaping up, where you see prices headed on just the key commodities?
I think, see, fundamentally, copper, aluminum, and zinc are bullish. इसका तेजी continue रहने वाला है. Especially copper and zinc are being extremely outperformers. And recently, because of overall macro sell-off in commodities, even these commodities came down a little bit. So copper is a very good value buy. Zinc is a very strong buy at this point of time. Again, as Kothari ji said, silver, gold में, especially gold में, मुझे लगता है कि आपको मतलब कुछ ज़्यादा सोचने की ज़रूरत नहीं है. लॉन्ग टर्म इन्वेस्टमेंट का आपका परव्यू है तो आप बिल्कुल इवन एट करंट लेवल्स पे आप एंटर कर सकते हैं. अगर आपको थोड़ा बहुत अगर कॉन्फिडेंस कम है तो 3, 4, 6 इंस्टॉलमेंट्स में आपको नेक्स्ट 3, 4, 5, 6 मंथ्स में लेना चाहिए. इफ यू आर एक्चुअली लुकिंग एट नेक्स्ट 18 months to 24 months, absolutely there is no doubt in that. Silver slightly speculative है, थोड़ा अवॉइड करना बेटर है. लेट इट सेटल डाउन अ लिटिल बिट. आई स्टिल बिलीव देयर इज अपसाइड इन सिल्वर, बट from where the risk reward ratio जो आपको it will fall into the place or not depends on where it stops at this point, right? It's basically risk management selling which is happening, margin triggers, a lot of infused selling which is happening rather than actually fundamental story. So let it settle down and then we can see on the silver.
Okay, fair enough. What about your outlook on crude oil prices? Because it's been affected, Kishore, by so many factors, OPEC, and then, you know, the kind of announcements that we've been seeing, etc. क्या होने वाला है crude oil prices के?
Crude में structurally demand कमजोर है, उसमें कोई doubt नहीं है, because Chinese slowdown is significantly impacting demand. Strategic जो reserves है वो already full है, so बहुत ज़्यादा demand वहाँ से नहीं आ रहा है. So the only factor right now जो recently $55 से $60-65 तक जो drive किया है, that's only unrest in Iran and with the potential trigger to spill over this to a larger conflict. उसका जो $8 से $10 का premium चल गया, but otherwise fundamentally weak commodity है. But because it's highly news driven, if something goes wrong in Middle East, the premiums could spike significantly. So base case scenario आपको FY26 का FY26-27 का आपको base case scenario देखेंगे तो $55 to $60 is where WTI will stay. Brent will be around $60 to $70 के बीच में रहेगा. The best case will be around 70. Again, barring any unforeseen events.
Okay. Point taken. Mr. Kothari, would like to thank you so much for joining in. Appreciate your time.
Thank you, madam.
All right. Kishore, just coming right back to you, do you think that this budget could be described as one that was growth focused? Ya to it was very fiscally conservative, jaise, you know, past mein government ka, this was the focus, you know, being very fiscally prudent?
No, I think we don't have a big issue with growth. So we have been growing decent enough. We are the fastest growing economy even at current levels compared to any other economy, especially larger economies. The fiscal prudence is something very impressive at 4.4%. It's really impressive they are maintaining. Inflation is under control. The capex and infrastructure based spending is there. So even that the fiscal which is there is more investment into building infrastructure and capex. So which is going to be very productive in nature. So I believe it's a strong budget. Yes, some of smaller things are there, but I don't think that should be a big issue. It's a very constructive budget, which I feel.
Okay, fair enough. I also wanted to understand your standpoint on Indian investors, you know, from this, for Indian investors, which are some of the global markets that you think they should be looking at and why do they look attractive?
See, in global arena, you can divide the market into two basic segments. One is West. West is driven primarily by US. US market is heavily onto AI and AI related ecosystem. So that will continue to grow. AI is where the entire growth story is coming. Headwinds are a lack of growth in rest of most of the other sectors, consumption, real estate, and housing. Everything is under pressure. So it's purely AI story. Coming to Asia, Korea is struggling with 2% GDP growth in 25, 26. So they could be slightly better off, but they have recovered a bit. It's not looking great, but a couple of investments like Samsung and other chip manufacturers are there in Korea, which are very similar to US chip manufacturers like Nvidia, but they come at roughly around 40% cheaper valuations because of the market being at a cheaper PE. Generally, Korea trades at much lower multiples of the PE. One of the great opportunity which I see is Japanese government bonds. Japanese government bonds are looking extremely valuable. The yields are at a multi-decade high, 2.25% yield. Plus, Japanese yen has depreciated recently to around 150, 155. And roughly around $500 billion worth of Japanese carry trade unwinding is going to happen, which could trigger the appreciation of yen back to around 130, 135. So at a recently high yields and a possibility of currency appreciation. So Japanese government bonds is something or related ETFs could be an investment opportunity. Better to avoid China. China slowdown is there, and especially the housing sector is going to continue to be a big struggle. And I think most of these markets are going to be again a couple of markets like Vietnam and Indonesia are going to be some value buying. Recently, there's a big correction in Indonesian market that could become a little bit relatively positive in the near term.
Okay, so why is it that you're saying no to the Chinese markets? Because there's so much, being talked about the kind of growth potential from there, the whole India versus China story, etc. But why, in your view, is it not a market to look at?
See, China has been underperforming on the growth front. Their targeted GDP growth is at 5%, and they even this year they've grown at around 4.4%. And their housing is still struggling. A massive public debt in the local administrations, especially the local government administration offices. There is a built-up of huge public debt that is going to be a big burden to come out. I think there are some pockets of opportunities within China. There are two things which I look at. One is EV manufacturing. Second is renewables and renewable related industry, especially the solar panel manufacturing. So solar panel demand is expected to double from here to 2030. So there are a few players in that area, few players in green technology. So renewables and EV. There are a couple of players like BYD, which could be very attractive bets, but as a market is going to be underperforming.
Okay, fair enough. What do you think that the government really needs to do, or what else rather do you think that the government needs to do to boost NRI investments in India?
I think one of the major issue, or let's say a problem which needs to be cleared, roadblocker, which can say, is that ease of doing KYC. So if I have to open an account from sitting from here into any US or any other European markets, I can do sitting here thoroughly online. But unfortunately, the NRIs cannot do that. Similarly, complete eKYC kind of thing. So they have to have physical components. So they have to have a wet signature. They have to send the form through courier and all those things, and the attestation of their documentation, etc. So I think if we are able to ease the entry of NRIs with eKYC and electronic authentication of their documentation, so that could actually bring a lot of people. At the same time, except in mutual funds, rest of all the products like PMSs and alternates, etc., most of them are again a physical format. large applications, and it's tedious paperwork. So if you're able to digitize that and bring that the entire flow into digital ecosystem, I think that could clear a lot of things, and we could be better off. And also a little bit of on the taxation, which is still cumbersome, and which is again involves a lot of process and paperwork from their respective banks, as well as through PIS account, etc. Again, that also can be eased out to facilitate better flows and more participation from non-resident Indians.
Kishore, do you think that real estate as a sector wasn't really touched upon in this budget? What would be your assessment as to how the space would be impacted?
I think so. The current growth in the housing sector in India has been very healthy. So I think that could be one of the reasons. But I'm not a big real estate expert in Indian market, so I might not have a detailed comment. But I think the growth in housing sector in India has been very robust. So I don't think it needs a significant support from here, and they have already done a couple of things in the last couple of years. So they might wait it out for those things to play out.
All right, good to have you. Thank you so very much for joining in. Let us move on and get a larger picture on the tax announcements, on what it means for the capital markets, on what it means for taxpayers as well. Rajat Rajgharia, MD and CEO at Motilal Oswal Institutional Equities, right here with us in the studio. Good to have you. Rajat, I want to begin by talking about one of the most important things I think that were announced in the budget, the fact that there has been a modest improvement in the fiscal picture. There have been reductions, in the fiscal deficit, in debt. There has been boost in manufacturing from textile to chips. What has been your assessment on the key fiscal announcements? Because so much was hinging on that.
Yeah, I think we live in an era where budget continues throughout the year. We are still marked by this one day of an event, but
you're right.
I think the bigger budget was announced a few months back with the GST cut. That was out of turn, right? Yeah. That announcement coming in today's budget would have changed the whole landscape or would have changed the whole narrative of this event, right? So I think the way the budget has evolved over the last several years, first it's an accounting assessment like you do for individual or for corporates.
Yeah.
And second, maybe setting a direction on where the things are going to move. On the fiscal numbers direction, I think broadly, we'll have to pinpoint something here and there, but otherwise I think they're broadly okay. When you look at the revenue numbers, people were expecting same kind of trends. When you look at the expenditure numbers, whether it's capex, look at fiscal deficit, right? More or less, last year we did 4.4, this year we are expecting 4.3. Economists are saying the gross borrowing numbers are little more than estimate, but numbers rarely match to that second. So I think broadly numbers are okay.
Okay.
Right. Second, I think, of course, in a speech of 1.5 hours, you will hear a lot of announcements relating to, farmers or SMEs or exports, etc. Again, those we are used to it. Our markets in particular get excited or spooked by specific capital market norms also. So in the run-up to this budget, you were seeing a lot of media or expert articles relating to capital gains or what can be done to reverse the FII outflows, right? Somehow I think that was a lot more expectations, right? If you look at the trend of this government, they have more been on the side of raising this gradually year after year. Right. And for them to suddenly scale it back, I think needs a lot more discussion or deliberation internally, right?
But I just want to know, because there are a lot of investors and viewers who are tuned into the YouTube channel right now of Motilal Oswal, and they have a lot of questions regarding the stock markets. The year has done precious little for equities, as we know, and now we're looking at another year of perhaps consolidation. Yes, earnings growth will be the key factor to revive it. FIIs coming back will be another key point. But what does an investor do at this point in time? Sit pretty, be patient, buy into the dip? What do you do?
So if he's an investor, he should
Patience
keep
is the name
doing.
of the game.
He should keep doing what he's supposed to do.
Which is?
Is to keep finding growth ideas and buy them at good price.
Can you give us some growth ideas?
There are a lot of. If you read any Motilal Oswal report, you will find many.
Share with us some.
I will come to that.
Yeah.
But I think the bigger message is that from an investor point of view, a budget should not materially change the thesis, right? Again, I think from a market's point of view also, generally, I mean, don't take it adversely, but I think media, broking, capital markets, we make budget a very big event, right? While if you look at the events which are going to impact the markets are outside the budget.
Okay.
Where first, I think this whole tariff thing is very serious.
Oh, yes.
Very serious, right?
Oh, yes.
And given the adversity of the US tariff, the way the government has approached to sign tariffs with the bigger nations, I think should not get lost in this budget event, right? And at least we all hope that, suppose I tell you that in the next 1 month the US tariff gets signed on, we all will forget the budget and move on to it.
Yeah.
So I think that is where the growth is more hinging on. I think second, the RBI is doing a lot of things to stimulate the growth, both in terms of providing liquidity and cutting rates. And third, which is important thing, is that the corporate sector has to also find their own ways to grow. We just cannot every year look at the budget कि हमको ये सबको चाहिए ही, right?
Yes.
How do you do that? So I think outside the budget, the story will be far more relevant for investors.
Okay.
Budget is off. I'm not undermining budget, but I think the other 364 days are as important as this day. Yeah. And I think to your point where markets have consolidated well, frankly, if you ask me, I don't see another year of consolidation.
So
I see the markets to do very well. Because
this year?
of next 12 months, right? And largely driven by two things, right? I think we have been at an extreme end of an underperformance globally, right? That is also reflected in the way FII outflows have happened, right? It's very easy to just extrapolate the line from the past to the future.
Recency bias.
It rarely happens,
okay.
Right? Point number one. Point number two, I think you are genuinely seeing credit flow happening in the economy now. The last number published was 14% growth. You have not seen the 14% growth now almost in a year. And when credit flow happens, you will see consumption coming back.
Okay.
And I think the third thing is that a large part of the market where froth was built on the valuations have corrected a lot. You may see Nifty moving within a gap of 5-7%, but many stocks from their highs are up 30, 40, 50%. So I think the markets have their own beautiful way of adjusting things, right? But I don't look at this as a market of consolidation.
Okay.
I think that maybe next 1 quarter you may see things being more muted, but I think we are ripe for a good double-digit returns in the markets from here next 12 months.
Good double-digit returns in the next 12 months. That's very heartening to note, especially what we've been through. So which sectors do you think are going to lead from the front that will take forward this rally?
I think the leader of this rally will be banks.
Okay.
Right. As credit growth comes back, and at least in my last 2.5-3 decades of tracking banks, I have not seen the balance sheets being genuinely so strong as they are today, right? And when you look at the valuations of banks, they are 30 to 50% discount to Nifty, right? There's no reason for them to be at this discount. Okay. They will grow, they will raise in quality, and they will grow in valuations. Okay. So I think, and that being a very large part of the index itself will drive the markets up. That is one. Second, I think, given the landscape that's shaping up globally, you should be more positive on industries which are very cost competitive domestically, like autos, right? When you look at the two-wheeler or a four-wheeler, right, there is very little competition that you can see from anyone globally coming into this space. In fact, a lot of our manufacturers can compete globally on the export side. And we are looking at domestic consumption in autos to be very well. It's a 6-stock sector, right? 3 two-wheelers, 2 four-wheelers. You can cherry pick. You like H or you like B or you like T in.
And you'll make.
So you can do that, right? I think. And third, wherever you get, I would think companies which can deliver 30-40% earnings growth CAGR, a lot of them have corrected 30-40%. For example, some of the EMS names, they have corrected a lot because maybe 80-100 P were quite crazy, right? But they are back into that maybe 30-40 Ps, right? Maybe not so low also, but if you are confident that they will grow at 30-40% CAGR still from here, they are unlikely to get cheaper from where they are today.
Rajat, what a pleasure it is interacting with you. Thank you so very much for putting the budget into perspective and more importantly, the market and what investors should do. And I think it's very heartening that you said the next 12 months are looking far more promising. So
yes. Thank you. Have a good day.
Thank you for being with us. All right, let's hope that our next guest shares the optimism. Aashish Somaiyaa, CEO of White Oak Capital, joins in. And Aashish, you know, we were just speaking with Rajat Rajgaria, and he said that, yes, the budget is important, but the 364 days before and after it are equally important. So one shouldn't get too perturbed by the budget. What do you think? And are you perturbed by what was announced by the FM today?
No, so, Awan, there is no reason to actually get perturbed. I mean, it's natural that, unfailingly, whatever one may say, before a budget, some expectations get built in. Now, if you really see, before this budget came, just in the last 1 year, there have been tax cuts, there has been a GST rationalization, we are looking at an 8th pay commission being announced, and in every state election there are some kind of incentives or some kind of dole-outs, whatever you call it, that is being announced. That should actually be seen from a consumption lens. If you look at the budget itself, what happens is that because of India's underperformance, like last year was 30% underperformance compared to emerging markets. And in January itself, I think it's another 10-12% underperformance compared to emerging markets. So when there is significant underperformance and the rupee is depreciating, for some unstated random reason, there is this expectation which started getting built that we are very uncompetitive on taxation relative to other emerging markets. So let's watch if the budget does something to address this. And then that expectation got built and the expectation got belied. And in fact, what you got was a hike in STT for FNO. So what happens is that when this announcement comes, all of us being part of capital markets, the market's first reaction is to this rather than looking at the wider aspects of the budget. When you come to the wider aspects, I think it does a great job because, normally when a budget starts, you hear long speeches about the rural economy and rural roads and connectivity and the agri economy and so many things. But this budget spoke only about manufacturing. It spoke about data centers. It spoke about, tourism and, related industry. It spoke about, logistics and connectivity of different modes of logistics. So it said all the right things in terms of engendering investment, in terms of attracting manufacturing. It made all the right noises. So I don't think there's much reason to be really disappointed. I mean, it's just that the market builds some expectation, then the expectation gets belied. It's like, self-inflicted kind of situation. But in terms of what the government should do, I think they've done all the right things.
Okay, they've done all of the right things. So in particular, what stood out to you? Was it the impetus to manufacturing growth? Was it the data centers? Was it MSMEs? It certainly wasn't STT, was it?
So STT, see, I'll tell you, I'll address the STT point first. And, I'm also not a big fan of what has really happened. I'll tell you the reason why. The reason is because we all know, especially people who've been around for a couple of decades, we know that STT was introduced when LTCG was removed. Now LTCG is back and it's been hiked. And on top of it, we have surcharge and cess. And on the other hand, STT has not been reconsidered. Not only it has not been reconsidered, STT also has been consistently hiked. So now you have a situation for capital markets where dividend paid from tax-paid income of companies is again taxed in the hands of shareholders. So the dividend is clearly double taxation. Then you have long-term gains at 12.5 plus plus, so which is more than 14%. You have short-term gains, which is 20% plus plus, so more like 24 or 23%. And then you have STT. Correct. So definitely, I'm not saying we should have cut capital gains tax. No, that was not the expectation. But hiking STT one more time. And look, all of us are not speculators. I mean, the mutual fund industry manages, I think, north of 3 lakh crores in arbitrage funds. We use FNO to hedge for our customers. We manage, I think, more than 10 lakh crores as hybrid funds, and they also make use of FNO to reduce volatility for our investors. So all of FNO is not speculation. In fact, when STT keeps going up, it increases the hurdle rate of returns to be generated just to overcome the tax headwind. Correct. So that is one. Now coming to what stood out, of course, look, I said right at the onset that typically a budget has long speeches about rural economy, whereas this one, I'm sure the government spends on those sections of the society and the country as well. But this one was overarching impetus was clearly on manufacturing and semiconductors and data centers. So all of that is very positive. It stood out for me very clearly. The other important thing, at least, which was done was that buyback taxes. Right. I mean, because buyback was now previously fully taxed, at least now it will be taxed at a rate of capital gains, which is the fair thing. Because if you tax dividends as well as buybacks very heavily, you are actually causing, you're causing concerns for governance because you're preventing companies from sharing returns with minority investors. So at least that one is a welcome step.
Okay, fair enough. And I was wondering, because there was so much being talked about as defense allocation, how did you read into the defense expenditure of 5.9 lakh crores? And do you think that this space, which has overall seen quite a strong move already, still has the legs to go up higher?
Yes, see, defense spend in the last 3 to 4 years, there was a very high double-digit CAGR, and now also people were expecting that it should continue to be a high double-digit CAGR, whereas it's a single-digit CAGR. But see, when you have a single-digit CAGR jump up, two things to keep in mind: it is still an increase; it's not a decrease. And second is, I think sometimes the government also looks at how much of the budget is utilized, how it is utilized, and what results it is producing. So just hiking budgets back to back, or sometimes market wants to hear what it wants to hear. But from a government's perspective, that may not be practical. They have to see utilization, they have to see implementation and results. And all said and done, even if it is a single-digit hike, it is a hike. It's not a reduction. So I don't think there is much negative in that, really. Like I said at the onset, sometimes market builds up certain expectations, and those expectations don't stand to reason.
Okay, fair enough. Overall, how would you rate this budget on 10? Is there anything that is left to be desired? And what would be your long-term view on the markets? I know I wrapped it all in one question, but if you could answer.
So I would say that, the only debit, the debit is clearly related to, ignoring the fact that we are becoming an uncompetitive emerging market purely from taxation perspective. Because if you look at it, over 20 years, our US dollar CAGR is 10%. And for a good part of that 20 years, taxation was reasonable. Now that there have been repeated hikes on taxation, maybe 10% return is not good enough to compete with other emerging markets. Maybe you need to generate 12. So if your economic growth and your corporate performance is going to be so fabulous that people will be willing to tax and still willing to pay tax and still invest with you, and you will be able to take care of the tax headwind, then there is nothing to worry about. But yes, definitely the taxation headwind has gone up, and one was hoping that we would I'm not saying for domestic investors, but for international investors, you need to be competitive. I mean, we manage emerging markets funds. We invest all over the world. And when part of that allocation, like 20% allocation comes into India, the taxation is very different from what it is for the other 80% of the portfolio. So I think that is where the debit on the points or attractiveness comes. On all other fronts, I would say fairly positive. So maybe 7 on 10 or something like that.
Okay. 7 on 10 is what you're giving the budget, and that's a fairly good one. I don't know how the markets, or if the markets today at least would agree. But nonetheless, thank you so much, Aashish, for joining in and giving us your take on the budget. And it's just about an hour to go for the markets to wrap up. 300 points down on the Nifty, for the Sensex as well. We're well in the red. A lot of the blue chips are under pressure, and in particular, those AMC-related stocks have certainly felt the heat. Infrastructure-related stocks in the spotlight. Healthcare got a bit of a boost, so that sector has stood out. But with that, we're wrapping it up on this coverage of Motilal Oswal's YouTube channel. From the entire team that put the show together, a huge thank you to all of you for watching. And please do remember that you can watch the stream recording. You can hear out all the expert views from Ramdeo Agrawal, Aashish Somaiyaa, all of the tax experts that we had on board, Mr. Madhu Kela, as well as Kishore Narne on Commodities, on the stream of this recordings to hear out all of those views. Do remember to subscribe to the channel. Do remember to like the video. Do remember to comment. And thank you so much once again for watching.